Ladies and gentlemen, we will commence the event in a few minutes. We kindly request you to enter the room and please be seated. Bapak Ibu yang kami hormati, sesaat lagi tamu VIP akan segera memasuki ruangan. Kami mohon perkenan Bapak Ibu yang menempati kursi di belakang agar dapat berpindah ke depan. Ya, sekali lagi kami mohon perkenan Bapak Ibu untuk menempati kursi yang ada di barisan depan terlebih dahulu. The first and second row are reserved for VIP speakers. And as for the third row and so on, you may be seated in the third rows and fourth and so on. Ya, baik. Terima kasih Bapak Ibu. Ladies and gentlemen, distinguished guests, please rise and join me in welcoming Chief Executive of Insurance, Guarantee Institutions and Pension Fund Supervision of OJK, Bapak Ogi Prastomiyono, and our VIP guest. All right, ladies and gentlemen, before we begin, please rise for our national anthem, Indonesia Raya. Ladies and gentlemen, you may be seated. Your Excellencies, distinguished guests, ladies and gentlemen, it is an honor for me to introduce Chief Executive of Insurance, Guarantee Institutions, and Pension Fund Supervision of OJK, Bapak Ogi Prastomiyono. Selamat pagi, Bapak. Also, Deputy Commissioner of Multifinance and Other Financial Services Institution Supervision of OJK, Bapak Bambang Budiawan. Head of Regional 8 Bali and Nusa Tenggara, Ibu Kristrianti Pujirahayu. Good morning, Ibu. Also, Department Head of Other Financial Services Institution Supervision of OJK, Bapak Triyono. Head of Departments, Head of OJK Regional Offices, Directors, and other OJK officials. Honorable representatives of association and financial services industry, and all speakers and moderators. We also welcome all the honored guests of today's seminar. Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, Salam Kebajikan. Good morning, ladies and gentlemen. We are proudly present and welcome you to OJK's International Seminar in the topic of Promoting Digital Finance Inclusion for Consumers and MSMEs through the use of credit scoring. All right, ladies and gentlemen, please let me introduce myself. My name is Idham Barik, and I will be the master of ceremony for this event. Today is the first day of OJK's International Seminar on Promoting Digital Finance Inclusion for Consumers and MSMEs through the use of credit scoring. In this first day of seminar, we will be having several agenda, namely, welcoming remarks by Head of OJK Regional 8 Bali and Nusa Tenggara, opening speech by Chief Executive of Insurance, Guarantee Institutions and Pension Fund Supervision of OJK, And then visionary speech by Director of Institutional Products and Banking Activities Regulation of OJK. And then in this industrial address speech by Deputy Secretary General 2 of AFTEC, followed by fruitful seminar discussions, and lastly, focus group discussions of innovative credit scoring task force and working group sessions of the representatives and innovative credit scoring member. Ladies and gentlemen, without further ado, we are opening today's session with the welcoming remarks by Head of OJK Regional 8 Bali and Nusa Tenggara. Please welcome Ibu Kristrianti Puji Rahayu.
Honorable Bapak Ogi Prastomiyono, Chief Executive of Insurance, Guarantee Institution and Pension Fund Supervision of OJK, Bapak Bambang W. Budiawan, OJK Deputy Commissioner of Financing Institution and Other Financial Service, esteemed colleagues from OJK, Pak Triyono, Department Head of Other Financial Institution Supervision, and also Director, Deputy Director, and also Head of Regional that I can see from here, Pak Darmansah, and then Pak Darwisman, and distinguished representative of association and financial service industry, and all speakers and moderator. Also Mr. Neil Mundru, Deputy Chair of International Committee of Credit Reporting, and also Mr. Peter Sherin, Executive Committee Member of Business Information Industry Association, and Mr. Inko Jion, Advisor of Asia Credit Reporting Network. Om Swastiastu, Assalamualaikum warahmatullahi wabarakatuh, Rahajeng Semeng, selamat pagi, and good morning for all of us. Before we begin our focus group discussion, let us take a moment together to express our gratitude and praise to the presence of Almighty God, who always provide us blessing and guidance so that we can be here together to discuss synergy of information credit management agency and innovative credit scoring in promoting financial inclusion in a good health, and we may hope that discussion will be fruitful and deliver some strategic direction to enhance the role of credit scoring in promoting financial inclusion. Honorable guest speaker and all participants who have joined in this focus group discussion, on behalf of Indonesia Financial Service Authority, I'm honored to welcome you to Bali, one of the most beautiful islands in Indonesia. And today, this beautiful sunny morning in Bali indeed represents today's Bali economy. Bali has successfully weathering the storm. After these past 3 years, we have been fighting the COVID pandemic situation. Normally, economic growth of Bali is above Indonesia nationally, but when the COVID pandemic hit us, our economic growth is lower than Indonesia's. The pandemic has slowed the economy in almost all parts of the world, thus impacting also the foreign tourists in Bali since 2022. Therefore, in the second quarter of 2020, Bali hit the lowest point of economic growth to as low as -12%. But like the wise men say, there is always the light in the end of the tunnel. In the third quarter 2022, just after Indonesia G20 presidency event, Bali economic performance in the fourth quarter 2022 saw a definite recovery trend. Bali economic growth hit 6.1%, higher than Indonesia, which is in 5.1%. As Tunggara, Bali started to recover, and this recovery came from numbers of major programs in collaboration with key stakeholders such as minister, government, association, financial industry, and including digital information transformation. Together, we creating a more resilient economy. Honorable guests, ladies and gentlemen, based on 2022 National Survey on Financial Literacy and Inclusion, the Financial Literacy Index has increased from 38% to 49% in 2022. While the Financial Inclusion Index also increased from 76 to 85.19% in 2022. Despite this improvement, the access to financial sources still became a challenging issue to solve. One of the key is that lenders don't have sufficient data to assess the creditworthiness of those consumers. Globally, about 1.7 billion adults are unbanked or don't have any account at financial institution and rely on cash. This World Bank on 2017. The unbanked, who tend to have no financial identity at all, generate no traditional financial data. While most unbanked individuals live in emerging and developing economies, the lack of customer data is still a problem in more developed markets. For instance, in the United States, nearly 50 million adults have no or have limited credit history to generate a conventional credit score. This data problem cannot be solved within the traditional financial system, has led practitioners, regulators, and policymakers and academics to consider the potential of alternative data sources that can be spanned a much wider range of individual and often are non-financial to assess creditworthiness. Honorable guests, ladies and gentlemen, this event will discuss the enhancement of financial inclusion through synergy of innovative credit scoring and banking information management institutions to assess unbankable individuals to obtain credit from financial service providers, therefore enabling them to conduct their business. Indonesia Financial Service Authority hope for collaboration in the digital transformation of the fintech industry and the digital financial service sector, which can serve as the spearhead of the national economic recovery. Digital transformation should also be capable of promoting national economic growth, including supporting the micro sector to digital platform and collaboratively transforming micro, small, and medium enterprises into digital medium, small enterprises. Honorable guests and ladies and gentlemen, we are delighted to have you all here with us today, and we hope that this discussion will be an informative, engaging, and also memorable experience for everyone to exchange ideas, discuss critical issues, and learn from others' experiences. We believe today's events will be an excellent opportunity to connect, network, and engage with great individuals who share our passion and commitment to financial growth. We hope that you will take full advantage of this opportunity and make valuable connections that will benefit you and your organization. Before I end this speech, allow me to deliver a poem or pantun in bahasa. Semoga tidak terkesan memaksa, karena diterjemahkan. Went to Denpasar towards tarik kecak performance. Jegek, if we are in Bali, say jegek and bagus. Don't forget to order pai susu by request. Thank you for your attendance. Welcome to Bali, dear our guests. Once again, welcome to Bali. We hope you have a fantastic time with us today, and we look forward a productive and enlightening event. Last but not least, Dumogi Setata Kenak and Rahayu, Om Santi 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 Om. Thank you.
Thank you very much, Ibu Puji, for such a warm welcome and for the poem, Ibu. Bali is currently very crowded, Ibu. That's why there are lots of our participants who cannot join this morning because the flight, they just got the flight in the afternoon, ladies and gentlemen. So, yeah. But it's okay. Let's just proceed to the event. Now for the keynote speech by Chief Executive of Insurance Guarantee Institutions and Pension Fund Supervision of OJK. Please welcome the one and only, ladies and gentlemen, Bapak Ogi Prastomiyono.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, Namo Buddhaya, salam kebajikan, salam. Good morning. The Honorable, our guest speakers, participant of the International Seminar on Promoting Digital Finance Inclusion. Our guest and speaker, Mr. Neil Monroe, Deputy Chairman of International Committee on Credit Reporting. Mr. Peter Sherin, Executive Committee Member of Business Information Industry Association. Mr. Inko Jeon, Advisor of the Association of Credit Reporting Network. Bapak Firly Ganinduto, Aptek, Pak Budi, Pak Adrian, dari OJK, Bapak Bambang Budiawan, Ibu Kristianti Puji, Head of Regional Office 8, OJK, Pak Triyono, all the head of the OJK regional, from OJK 1 until 9, Director, Deputy Director, and others OJK officials, distinguished speakers, moderator, and participant. First of all, I would like to express gratitude to God Almighty so that we can gather today to participate in this important event. It's a pleasure to me to welcome you all to the International Seminar on Promoting Digital Finance Inclusion for MSME through the use of credit scoring. Hopefully, this seminar will deepen our knowledge and understanding on the importance of innovative credit scoring to support credit growth and to accelerate financial inclusion. I would like to especially thanks to all speakers that will share their valuable insight on this seminar. Distinguished guests and participants, financial services companies play crucial role in economic by providing access to credit for individuals and business entities to finance their needs. Is it important to recognize that there are multiple types of financial institutions in Indonesia that offer credit products, which include like banks, multi-finance company, peer-to-peer lending platform, pawn shops, microfinance institution, and cooperative or credit union. Each institution has its own characteristics in terms of their lending practices. Given the various types of financial institutions in Indonesia that offer credit products to individuals and businesses, is it essential for this institution to effectively mitigate credit risk. The impact of credit risk on financial services can lead to significant losses, reduce profitability, and potential insolvency. Therefore, credit risk has to be properly mitigated through the assessment of 5 Cs, which includes assessment on character, capacity, capital, collateral, and condition of borrowers to make informed lending decisions. The 5 Cs of credit are still crucial in the era of fintech and big data, as they provide a structure and comprehensive framework for credit risk management. However, the rise of COVID-19 pandemic has created a more uncertain economy, leading to increased credit risk for financial institutions and pose additional challenge to accurately assess the capacity and condition of borrowers. Distinguished speakers, participants, credit scoring is one of the most important tools in credit risk management and plays a crucial role to establish efficient financial services. In Indonesia, credit scoring services is provided by 2 types of entity, which is conventional credit bureau, lembaga pengelola investasi perkreditan LPIP, dan inovatif credit scoring ICS provider. Conventional credit bureau provide credit report and scores based on traditional credit data, such as loan payment history and outstanding debt. One of the primary objectives of credit bureau is to reduce credit risk by providing lenders with more information about borrower creditworthiness. On top of that, credit bureau also benefit borrower by allowing them to build credit history and improve their credit score over time. On the other hand, ICS is a newer form credit scoring that utilize alternative data sources to assess creditworthiness, such as social media activity, online transactions, and mobile phone usage. ICS is provided by fintech companies and aim to provide credit access to individuals, business entities who may not have a traditional credit history or have limited access to credit. Furthermore, there are several international organizations that promote responsible credit reporting practices, which also become speakers in this event, such as the International Committee on Credit Reporting, ICCR, the Association of Credit Reporting Network, ACRN, and the Business Information Industry Association, BIIA. These organizations collaborate with regulators and credit reporting agencies to develop best practices for credit reporting and to ensure that credit data is used responsibly and ethically. Distinguished speakers and participants, as we all aware, Indonesia's economy has shown great resilience, supported by strong fundamentals and great potential of its digital sector. According to Economy Southeast Asia report, as of 2022, the size of Indonesia's digital economy has reached 77 billion US dollar, or grew by 22% year on year. This makes Indonesia as a significant digital player in the region, as around 40% of the total value of South Asia's digital economy transaction come from Indonesia. The growth of Indonesia's digital economy has also been supported by the emergence of financial technology, fintech, with the ability to deliver efficient and accessible financial services. As of January 2023, there are 102 licensed fintech P2P lending in Indonesia, which offer the ability to simplify loan process, especially to those who limited access to traditional banks. With the application of the IT innovations, loan disbursement can be done quickly and easily. On top of fintech P2P lending, there are also digital financial innovators, DFI, that have not been specifically regulated by sectoral financial regulation. As of January 2023, there are about 97 DFI have been recorded in OJK and classified into 15 clusters of business model, which include ICS. Despite of this advantage, the development of fintech P2P lending and the rise of new financial products, such as buy now, pay later, have led to increased credit risk, which is reflected in higher rate of default. In this case, measures to maintain low non-performing financing ratio must be implemented through accurate risk analysis and tightening of borrowers' requirement. In order to maintain trust and credibility to the digital financial services provider. Therefore, we appreciate the development of innovative credit scoring model that use alternative data sources and advanced analytics as one of the important pillars to establish an efficient financial intermediary function in the economy. In addition, ICS providers should be able to play a more optimal role in supporting national economic growth as an enabler to improve financial inclusion by facilitating credit access to unbanked population, which include micro, small, and medium enterprises. To conclude my remark, I am optimistic that development and innovation in the financial services will provide value added to the overall economy so that larger part of the population can have better access to high quality financial products and services. In line with the implementation of financial sector omnibus law, OJK will be responsible on the supervision of technological innovation in the financial sector, which is especially led by one of its chief executive supervisor. There will be additional 2 chief executives in OJK for the next 7 months since the approval of the omnibus law. Therefore, I hope that today's event will become a platform for productive discussion between all relevant stakeholders that will result in urgent and important policy recommendation to assist the establishment of sustainable digital financial ecosystem in Indonesia. With that, I would end my speech and wish you a fruitful and pleasant stay in Bali. Thank you. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om.
Excuse me, Pak Ogi. We would be honored if you could stay on stage to take a group photo with our VIP guests, moderators, and speakers. Ladies and gentlemen, we will have 2 sessions of group photo. First with the VIP guests and the second one with all speakers and moderators. As such, I would like to firstly invite all the VIP guests to join Pak Ogi on stage and take a group photo. Bapak Bambang, Bapak Triyono, Ibu Puji, Ibu Indah Iramadini, Bapak Adrian Gunadi, Bapak Marshall Pribadi, Bapak Budi Ganda Subrata, Mr. Neil Munro, and Mr. Kevin Loh. We would like to kindly invite you to the stage and to take a group photo. All right. On 3, 2, 1, give us your sweetest smile, ladies and gentlemen. Okay, one more time. Semangat 45 Bapak Ibu. Boleh kita beri tepuk tangan? Thank you very much to our VIP guests. Please stay on stage as we also kindly invite all speakers and moderators to come up to the stage and take the second group photo. Okay, apologize. One more time for the VIP guest. Okay, now to all speakers and moderators, we invite you to come up to the stage to join our group photo. It's the second session of group photo. Yeah, we have many moderators and speakers today, ladies and gentlemen. There are about 20. So make sure you stay in the venue. You are joining our event because we will have like many fruitful seminars with international experts as our moderators and speakers. All right. First, maybe we can take the formal photo. Senyum tipis-tipis Bapak Ibu. Iya, luar biasa. Now for the second one, we can give like, like more informal pose. Yeah. Okay, give a big round of applause for all our VIPs, guests, speakers, and moderators, ladies and gentlemen. All right, thank you very much, and let's give them a big round of applause again. You may be seated. All right, ladies and gentlemen, now we are welcoming the visionary speech. Oh, yeah. Okay, sure. Ladies and gentlemen, apologize. We're gonna have one more photo session for the head of regional offices of OJK. Is that all right? Yeah, we're gonna have one more photo session of the head of OJK regional offices with Bapak Ogi Prastomiyono, because it's a rare moment, Bapak. Yeah. Thank you so much. Thank you so much, Pak Ogi, for your willingness and understanding. Because, like we are very honored to welcome you here in Bali, Bapak, at our event, International Seminar on Promoting Digital Finance Inclusion for MSMEs through the use of credit scoring. Okay, it's the last group. Introducing to you, ladies and gentlemen, these people, these great people are OJK, are at the head of OJK regional offices from all over Indonesia. All right, please give them a round of applause, ladies and gentlemen. Bapak Ibu, you may be seated. Thank you very much again for Pak Ogi. Bapak Ibu Kepala Kantor Regional dan Kantor OJK Daerah, terima kasih. Alright, ladies and gentlemen, now we are welcoming the visionary speech by Director of Institutional Product and Banking Activities Regulation of OJK. Please welcome Ibu Indah Iramadini.
Assalamualaikum warahmatullahi wabarakatuh. Salam, Om Swastiastu, Namo Buddhaya, dan salam kebajikan, salam sehat selalu. Bapak dan Ibu yang saya hormati, mohon izin saya memberikan visionary talk ini dalam bahasa. Namun apabila ada yang memerlukan translationnya, nanti panitia akan menyediakannya. Baik, saya mulai. Selamat pagi dan salam sejahtera untuk kita semuanya. Yang terhormat Bapak Ogi Prastomiyono, Kepala Eksekutif Pengawas Perasuransian, Penjaminan dan Dana Pensiun, Bapak Bambang W. Budiawan, Deputi Komisioner Pengawas Lembaga Pembiayaan dan Lembaga Jasa Keuangan lainnya, yang terhormat Bapak Triyono, Kepala Departemen Pengawasan Lembaga Jasa Keuangan lainnya, yang terhormat Ibu Kristianti Puji Rahayu, Kepala Kantor Regional 8 OJK, serta yang terhormat para Kepala Regional OJK, dan para speakers and moderators pada seminar internasional ini, serta Bapak dan Ibu hadirin yang saya hormati. Bapak dan Ibu yang berbahagia, saat ini Indonesia mengadopsi Dual Credit Information System yang memiliki Public Credit Registries atau PCR, yaitu informasi sistem layanan informasi keuangan atau yang kita kenal dengan SLIC. Dan juga ada Private Credit Bureaus atau PCB, yaitu Lembaga Pengelola Informasi Perkreditan atau LPIP, yang berkontribusi kepada peningkatan ease of doing business dari aspek penyaluran kredit atau pembiayaan. Detail informasi debitur tersedia pada SLIC mencakup informasi penyediaan dana debitur baik di industri perbankan, pasar modal maupun industri keuangan non-bank, yang dapat digunakan oleh lembaga jasa keuangan untuk melakukan mitigasi resiko kredit atau pembiayaan. Lebih lanjut, kehadiran LPIP di Indonesia sejak tahun 2006 dengan mengoptimalkan informasi debitur, SLIC, dan perluasan data selain informasi standar akan menghasilkan informasi perkreditan yang beragam, komprehensif, dan memiliki nilai tambah guna memperluas akses keuangan. LPIP merupakan lembaga penunjang di sektor jasa keuangan yang menghimpun serta mengolah data kredit dan data lain untuk menghasilkan informasi perkreditan yang diterbitkan dalam bentuk credit scoring atau skor kredit dan produk dan atau jasa lainnya. Credit scoring dan beberapa produk dan atau jasa LPIP lainnya akan digunakan oleh lembaga jasa keuangan sebagai sumber analisis dalam rangka penyediaan dana kepada calon debitur atau nasabah dan atau tujuan lainnya oleh anggota LPIP. Berdasarkan data yang diperoleh dari LPIP bahwa pada umumnya anggota LPIP mengakses informasi perkreditan dalam rangka penyaluran kredit atau pembiayaan dana sampai dengan plafon 100 juta rupiah. Nah, mengutip Credit Reporting Knowledge Guide dari World Bank pada tahun 2019, yang mengelompokkan industri pelaporan kredit global menjadi 3, yaitu credit bureaus, credit registry, dan commercial credit reporting companies. Diketahui bahwa credit bureaus di berbagai negara secara umum berperan untuk mendukung penyediaan dana dengan plafon yang relatif kecil, mencakup kredit retail dan usaha mikro, kecil, dan menengah atau UMKM. Adapun anggota LPIP saat ini di Indonesia didominasi oleh fintech peer-to-peer lending. Mengamati kondisi saat ini, perekonomian domestik sudah mulai pulih walaupun dengan berbagai isu tantangan terhadap pemulihan ekonomi itu sendiri. Kredit perbankan masih terus menunjukkan pertumbuhan positif sejak pertengahan tahun 2021 yang salah satunya didorong oleh pertumbuhan kredit UMKM yang secara signifikan tumbuh sejak akhir tahun 2021 sebesar 12,19% dan terus tumbuh hingga mencapai 18,22% pada November tahun 2022. Nah, tren ini melebihi pertumbuhan kredit baik secara total kredit maupun kredit untuk segmen non-UMKM. Kredit UMKM tumbuh secara signifikan sejak akhir tahun 2021 yang mendorong rasio porsi kredit UMKM terhadap total kredit menjadi di atas 20%. Meskipun dengan tingkat risiko yang relatif terkendali, kinerja positif pada kredit UMKM perlu didukung dengan penilaian risiko kredit pada setiap debitur yang lebih terukur, sehingga lembaga jasa keuangan dapat menyalurkan kredit atau pembiayaan sesuai dengan risk appetite-nya. Peran LPIP di sini sangat penting untuk melalui penerbitan produk kredit scoring untuk menggambarkan exposure kredit debitur serta mengurangi asymmetric information antara lembaga jasa keuangan dengan debitur. LPIP dibutuhkan dalam pemberian kredit atau pembiayaan kepada UMKM karena analisis yang sederhana dengan instant approval. Seperti halnya kredit konsumtif, kredit tanpa agunan dan pay later, kredit UMKM yang plafonnya relatif kecil tidak membutuhkan analisis yang bersifat kompleks. Sumber data dalam rangka menganalisis kredit UMKM lebih kepada data historis calon debitur untuk meyakini karakter dan kapasitas debitur. Hal ini dikarenakan karakteristik UMKM yang mudah berubah menyesuaikan dengan perkembangan bisnis dan lingkungan sekitar. Selanjutnya, pemberian kredit kepada UMKM juga sedikit demi sedikit berubah seiring dengan kemajuan teknologi. Dahulu kredit UMKM identik dengan sebagai contoh BRI unit, dana non simpan pinjam, atau produk bank lainnya sejenis, di mana analisis dilakukan secara manual, mendatangi debitur dan usaha dengan putusan pencairan bisa dalam 1 hari kerja. Saat ini, akses kredit UMKM semakin luas, antara lain melalui pay letter, P2P lending maupun platform lainnya. Debitur bisa saja cukup berada di rumah, begitupun analisis cukup dilakukan dari meja petugas lembaga jasa keuangan. Nah, hal ini dikarenakan data-data yang dibutuhkan untuk pengajuan dan analisis bisa dilakukan secara online. Persetujuan pun juga dapat dilakukan dengan lebih cepat. Bapak dan Ibu sekalian, LPIP diharapkan dapat memiliki kematangan dari sisi database, diversifikasi end user, dan penyediaan produk dan layanannya sehingga ke tahap berikutnya dapat melakukan ekspansi layanan dalam bentuk ragam value added services kepada end users. Sejalan dengan penelitian McKinsey & Company yang menunjukkan bahwa penyediaan value added services oleh LPIP harus pula diiringi dengan perluasan ragam provider data yang tidak hanya berasal dari institusi keuangan saja, namun juga penyedia data lainnya seperti perusahaan utilitas, retailers, maupun institusi pemerintah. Selain itu, LPIP diharapkan dapat semakin inklusif, sehingga tidak hanya menyediakan layanannya untuk bank, namun juga diharapkan dapat menyentuh pasar UMKM, korporasi, lembaga non-profit, dan juga pemerintah. Dari sisi perbankan, LPIP memiliki tantangan yang lebih jika dibandingkan dengan industri lainnya. Hal ini dikarenakan industri perbankan lebih mature dan umumnya telah memiliki internal credit scoring dengan proses yang cepat untuk jenis kredit tertentu seperti kredit konsumtif, kartu kredit, pay later, dan kredit UMKM. Bank juga dapat mengakses data slick secara penuh dan tidak sedikit bank menggunakan fasilitas robotik untuk menarik data slick agar lebih cepat dan langsung bisa diolah. Untuk memvariasikan data, bank dapat bekerja sama dengan inovatif credit scoring yang bisa disesuaikan baik dari sisi sumber data, cara pengolahan, hubungan dengan core banking system atau sistem internal bank, dan lainnya. LPIP harus dapat memberikan nilai tambah lebih dari apa yang bisa didapatkan bank saat ini. LPIP harus dapat memvariasikan sumber data, terutama untuk jenis-jenis data yang banyak dipakai perbankan dalam analisis, seperti data pembayaran listrik, air, telepon, pembayaran pajak, dan data behavior lainnya, terutama untuk mencerminkan karakter dari calon debitur. Data-data tersebut harus dapat digabungkan dengan data slick dan disajikan dengan baik melalui model yang akurat sehingga memberikan nilai tambah. LPIP harus segera bertransformasi dan meninggalkan perspektif lama di mana data yang dibutuhkan cukup berasal dari slick. Sementara, terdapat pula inovatif credit scoring yang juga memberikan penyediaan analisis dengan data yang bersumber dari selain data slick. Inovatif credit scoring dengan sumber data yang beragam dan penggunaan teknologi terkini mendukung kemudahan akses, bisa disesuaikan secara khusus atau customized, dan relatif lebih murah dari sisi harga. Nah, sinergi antara LPIP dan inovatif credit scoring merupakan langkah yang patut dipertimbangkan dan bisa menjadi win-win solution. Inovatif credit scoring memiliki keterbatasan dari sisi mendapatkan data slick, sementara pada sisi lainnya LPIP dinilai kurang responsif dalam memvariasikan data serta menyesuaikan teknologi. Jika kedua hal ini digabungkan, peran masing-masing akan semakin kuat. Hal-hal yang berkaitan dengan kepentingan dan kebutuhan bisnis akan lebih mudah untuk diakomodir dan akan menguntungkan semua pihak. Dengan sinergi ini, cita-cita untuk mewujudkan pertumbuhan UMKM dan inklusi keuangan yang lebih masif akan lebih mudah untuk dicapai. Bapak dan Ibu sekalian, OJK telah melakukan penyempurnaan ketentuan mengenai LPIP melalui penerbitan POJK nomor 5 tahun 2022 dan SEJK nomor 27 tahun 2022 sebagai ketentuan pelaksanaannya. Dalam ketentuan dimaksud, OJK mendukung LPIP untuk lebih berperan dalam mendorong peningkatan pertumbuhan kredit dan inklusi keuangan nasional terutama pada sektor UMKM melalui pemberian data slick kepada LPIP atas debitur UMKM secara penuh, mendorong LPIP untuk menambah variasi data dari sumber lain, baik dari lembaga keuangan dan non-lembaga keuangan, dalam menghasilkan informasi perkreditan yang bernilai tambah, serta membatasi pemberian data sesuai kebutuhan LPIP berdasarkan identifikasi historical penggunaan data slick oleh LPIP untuk menghindari pelanggaran konsen dan kerahasiaan data. Dalam pelaksanaan kegiatan operasional, LPIP bersumber dari penggunaan dan pengelolaan data end user. Pemerintah telah menerbitkan Undang-Undang Nomor 27 Tahun 2022 tentang Pelindungan Data Pribadi untuk menjamin hak warga negara atas pelindungan diri pribadi dan menumbuhkan kesadaran masyarakat, serta menjamin pengakuan dan penghormatan atas pentingnya pelindungan data pribadi. Dalam kondisi saat ini secara fakta bahwa penduduk Indonesia belum sepenuhnya memiliki kesadaran atas kerahasiaan data pribadi, antara lain dengan pemberian persetujuan akses data tanpa memahami konsekuensi maupun kelemahan pengamanan data, serta pembobolan data mudah terjadi. Sektor UMKM juga menjadi sektor yang rentan terkena pelanggaran kerahasiaan data. Bapak dan Ibu yang berbahagia, dari sisi pelaksanaan kegiatan operasional LPIP, OJK mendorong LPIP untuk lebih bertanggung jawab dalam pemanfaatan informasi perkreditan yang diatur dalam peraturan OJK, yaitu kewajiban bagi LPIP untuk pertama melakukan upaya untuk meyakini bahwa untuk pemanfaatan data kredit dan data lainnya dalam pengelolaan informasi perkreditan, sumber data telah mendapat persetujuan dari pemilik data akhir, dan mengadministrasikan seluruh permintaan terhadap informasi perkreditan, mencakup dokumen yang mendasari atau underlying documents, informasi perkreditan. Dengan demikian, di atas pelaksanaan bisnis LPIP sebagai entitas yang berorientasi profit serta dalam rangka mendukung implementasi undang-undang mengenai pelindungan data pribadi, LPIP diharapkan dapat memahami urgency concern data, underlying documents dari informasi perkreditan, dan edukasi kepada penyedia data lain, anggota LPIP dan masyarakat. Demikian hal-hal yang dapat saya sampaikan. Atas perhatian Bapak dan Ibu, semuanya saya mengucapkan terima kasih. Wassalamualaikum warahmatullahi wabarakatuh. Om Shanti Shanti Om, Namo Buddhaya, dan salam kebajikan.
Thank you very much, Ibu Indah, for such an incredible speech. Ladies and gentlemen, we would like to inform you that Pak Ogi will unfortunately be leaving the venue early due to another important agenda. We thank you, Pak Ogi, for gracing us with your presence and sharing us your insights. You may now take your leave. Please give a round of applause, ladies and gentlemen. We also apologize for any inconvenience this may cause and appreciate your understanding, ladies and gentlemen. And now we are welcoming the industrial address speech by Deputy Secretary General 2 of AFTEC. Please welcome Bapak Firly Ganinduto.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. May peace be upon us. Om Swastiastu, Namo Buddhaya, salam kebajikan. Yang saya hormati Bapak Ogi Prastomiyono, OJK Executive Head of Insurance, Guarantor, Pensiun and Fund Supervisor, Pak Bambang Budiawan, Deputy Commissioner of Multifinance and Other Financial Services Institution, Bapak Triyono, Head of Other Financial Services Supervision Department of OJK, Ibu Kristianti Puji Rahayu, Head of OJK Regional 8, dan Ibu Indah I. Ramadhani, Director of Institutional Product Banking Activities Regulation of OJK, and all the head of regional OJK who attended this session. And let me greet the guests, which is the FinTech. I call them FinTech, the captain of FinTech industries, which is my fellow FinTech board and members. I would like to introduce Mr. Budi Ganda Subrata, the Secretary General of AFTEC. Pak Budi. Mr. Adrian Gunadi, the Chief of AFPI. Adrian. Mr. Marshall Pribadi, Vice Chairman of AFTEC, Mr. Neil Manru, and Mr. Kevin Law, and all the FinTech players, the captain of FinTech industries in Indonesia. Good morning all. Indonesia is the fourth most populated country in the world. However, Indonesia is also ranked fourth most unbanked population globally. According to the World Bank, around 97 million adult Indonesian citizens do not have access to banking. Nevertheless, we must appreciate Indonesia's financial inclusion level, which continuously increase annually. In 2013, Indonesia's financial inclusion level was at 59%. In 2016, it increased to 69%, which then raised to 76% in 2019, and now climbed to 85% of last year in 2022. The government acknowledged the importance of financial inclusion in increasing and expanding the economic growth of Indonesia. The significance and importance of digitalization caught the government's attention to advance the financial inclusion process. AFTEC therefore sincerely appreciates the government's effort in pushing the digitalization process to achieve our very goal of financial inclusion in Indonesia. In 2024, the government is targeting financial inclusion to reach 90%, Quoting our Minister of Finance, Ibu Sri Mulyani statement, the financial inclusion target can be achieved through strengthening the digital synergy, acceleration, and implementation. The fintech industry is a large industry where fintech has various business models, which one shared goal to advance financial inclusion and literacy. One of the business models that can enable the increment of financial inclusion is the innovation credit scoring, or usually known as ICS. These are some of the advantages and benefits of ICS, namely, 1. Efficiency in the assessment process of the one's credit worthiness and the monitoring by the creditor or lender. 2. Credit scoring accuracy can be achieved with the help of technologies such as artificial intelligence, real-time data, and up-to-date database resources. 3. Operational cost efficiency and the ability to detect potentially fraud activities. In its development, the ICS industry is still growing and developing, and currently has second largest member in GKD OJK with a total of 20 industry players. The ICS industry has served various banking and non-banking financial services The ICS industry has served various banking and non-banking financial services institutions. According to the survey conducted by AFTEC, the ICS industry has utilized more than 50 data points to conduct credit assessments. The ICS industry has processed various data such as e-commerce transactions, e-money, telco, social media, web activities, demography, and other similar data. AFTEC and the ICS industry acknowledge that the importance of customer data protection used during the credit assessments. In order to ensure data protection and security, ICS administrators have added the Personal Data Protection Law, the PDP law, and even some ICS companies have complied with the toughest privacy and security law in the world, the GDPR, or General Data Protection Regulator. Not stopping there, the ICS industry also ensuring customer data protection with ISO 27001 and ISO 27701 certifications. Indonesia is currently adopting dual credit reporting system where the government and private sector are responsible to expand financial inclusion by providing and leveraging information regarding credit value-added services to financial services institutions and individuals. The synergy between ICS industry and LPIP has to be solely for the purpose of creating sustainable and growing fintech ecosystem while increasing financial inclusion. Therefore, in accordance to Ibu Sri Mulyani's statement as mentioned, in strengthening digital synergy and acceleration and implementation in order to achieve financial inclusion, the digital industry needs support from regulators and relevant stakeholders. In this opportunity, AFTEC would like to emphasize the importance of the regulator support to realize a sustainable and growing fintech ecosystem. One of the ways to achieve it is by giving clarity on the regulatory sandbox process. AFTEC believes that the collaboration can be obtained through legal clarity in doing business with the involved stakeholders. Together with the industry, AFTEC is delighted to be part of the event. It is AFTEC and industry great hope that this very opportunity can become catalyst where the regulator and policymakers can discuss and collaborate together to accomplish legal clarity and create a sustainable and growing fintech ecosystem. Lastly, we hope that our discussion today will be informative, inspiring insights for all of us, and we look forward to working together to achieve our shared goal of advancing financial inclusion in Indonesia. Thank you very much. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much, Pak Firly, for a very insightful speech. Distinguished guests, ladies and gentlemen, we will now proceed the seminar session of General Principle for Credit Scoring. The session will be moderated by Deputy Chair of International Committee on Credit Reporting, ICCR, Mr. Neil Munro. I will first read your profile, sir. Mr. Neil Munro has over 40 years experience in the financial services and credit reporting industries. As a founding member of the International Committee on Credit Reporting, or ICCR, at the World Bank, he has extensive experience in the development of credit reporting across all regions. He was involved in the creation of the World Bank's principles of credit reporting, the recognized standards for the industry. Neil was elected Deputy Chair in 2019. He is also Managing Director, Business Information Industry Association, or BIIA, that represents the business information and credit reporting industry in the Asia-Pacific region. In his role as a consultant of the World Bank, Neil has undertaken credit reporting projects in Pakistan and Cambodia. For Cambodia, he was responsible for undertaking an impact assessment of credit reporting in the country, one of only 2 ever undertaken. Ladies and gentlemen, without further ado, please welcome Mr. Neil Munro.
That picture makes me look very young. So I need to get it refreshed. Good morning, everybody. It's a pleasure to be here and to be presenting today on the principles of credit scoring. It's a pleasure to be in Bali. This is my first time in Bali, so I'm enjoying myself, much to my wife's shame, because obviously she's left at home. But I hope to come back, in which case I will bring her with me. But obviously, what I'd like to do today is cover the general principles of credit reporting. And I'm going to go through a number of slides. There's a lot of information on the slides. I'm not going to go through all of them. Obviously, these slides have been produced as much for reference points for you to take away, and also for us to discuss in the subsequent sessions. So, but thank you again for the invitation. So I've got to call my slide, so if I could have my next slide, please. It will come. There we go. So let me just quickly cover what the International Committee on Credit Reporting is all about. It was founded in 2007. It is the standard-setting body for the credit reporting industry. I'm pleased to say that Indonesia has been a member of the committee through the Bank of Indonesia and OJK for many years, and we very much appreciate Indonesia's involvement in the committee, as it gives good representation for the region, and so we hope that that will continue. And in fact, we hope very much that the invitation that we've issued to both the Bank of Indonesia and OJK to host the next meeting of the committee, which is due to take place in late October, early November, will be accepted, and then I will be back with my wife in November for that meeting. We have a role very much as a standard-setting body to set out policy, and the principles of credit scoring are very much the first output, the first of our standard-setting body. Why are they called principles? I'll explain that later, rather than standards. We do research and knowledge management, as the slide says, and we do capacity building. So we very much look to promote credit reporting and the standards, and hence the reason why I'm pleased to be here today talking to all of you about these standards themselves. We do a lot of work on particular topics around credit reporting, and I would refer you to the ICCR website, where you'll find a number of interesting policy papers which have followed on from the principles, particularly around alternative data, particularly around the use of data for financing for SMEs, which obviously has just been already discussed this morning, and cross-border information. So there is a lot of information there that I would recommend. The organisation, next slide please. The organisation, very quickly, we do have a committee, a plenary, which is the one I mentioned, which we're hoping to bring to Bali in November. And that's made up of representation from a number of different countries, which you'll have seen from the previous slide. As part of the development of the committee, we are building what we call regional consultative groups. And regional consultative groups are designed as a way of the committee engaging with local representatives and local organisations involved in credit reporting in particular regions. One of those is actually one we want to form in Asia. Some of you, I think, at this meeting were at the Regional Credit Reporting Conference that was held in Cambodia when Cambodia were chairing Asian region back last year, where we actually formally announced the Asian Regional Consultative Group. We're very much looking to develop that. That provides a very useful platform for both providers of credit reporting and regulators across many different countries to hopefully meet and share their experiences and discuss key developments. Again, we're hoping if we do come to Bali in November that we will be very much looking to host that meeting at that particular point in time. We have a number of working groups in other areas which I won't go into. Next slide, please. So I think some of this has already been covered in previous presentations, but let me just reiterate the benefits of credit reporting, why our committee exists and why we've issued guiding principles on that basis. Benefits of credit reporting are well known, but just to recap, it obviously provides a lot of benefits to lenders and credit providers in terms of reducing information asymmetry. I feel at this moment in time very sorry for the translators who are going to try and translate asymmetry into the local language, but it's basically the imbalance is the way it's meant to be. It obviously allows better pricing of risk. It obviously therefore improves profitability, which is always good because it allows reinvestment. And it obviously provides underserved segments, which my predecessor on the speeches covered. Regulators, it actually has a benefit to macroprudential supervision. It enables financial stability, which is good, policy formulation and research. Financial markets, it does actually improve the soundness of financial markets. Better lending, better quality of lending helps financial markets, and it fosters competition. From an economic benefit, that all leads to economic growth and job creation. And from a borrower's perspective, which is probably the most important thing, and again, I know that's been mentioned this morning, it allows access to credit, wider access to credit. It allows cheaper access to credit. And those are obviously benefits which help society as a whole. Next slide, please. The principles that were put together back in 2009, these were done at the request of the World Bank in talking to a number of the G20 countries and farther afield, where it recognized that credit reporting is playing a very critical role in the financial ecosystem. And a lot of the credit reporting systems at that time weren't regulated, and so very much the World Bank came together to provide some best practice, some standards, some principles for regulators in individual countries to take those and use those to build a regulatory and supervisory environment for all of their credit reporting system providers. So we have 5 principles. I shall briefly cover these. There's a lot more detail in the document. But there is data, fundamental obviously to credit reporting systems, security, which has become more and more prevalent recently, with the digitalization of data, governance, every system should have good governance, and legal in terms of how regulation should be set up to enable credit reporting, and cross-border, which does sound a little bit out of sync with all the others, but cross-border is there because credit reporting can play a very significant role and should play a significant role in enabling cross-border trade, something in this particular region which is obviously extremely important. So that's very much why we have that principle. Next slide, please. So what do we mean by data? There are 5 particular topics that we refer to in data, and these are very high level. These are principles. When we first look to set up standards for credit reporting, we recognize that credit reporting takes its shape and form in many different ways, and I'll come on and summarize that at the end of my presentation, but in many different ways, depending upon social and economic conditions in particular economies. So it was difficult to therefore say these are standards and be prescriptive, but obviously what we do is we set out principles, which we, as I said just now, enable hopefully regulators to take them and implement them into their local territories. But data has to be relevant. It has to be relevant for the purposes that you're actually looking to do, which is for risk assessment, not just credit risk assessment, identity risk assessment, AML risk assessment, and all the other different types of risk assessment that lenders do these days. It should be accurate. Incorrect data has a very negative impact on individuals' lives and businesses' lives, and so there's an obligation on accurate data. Accurate data is not just on the credit reporting system provider, the credit bureaus. Accurate data is on all parties involved in the credit reporting ecosystem. The companies that provide data, the credit reporting providers like the credit bureaus, but also the users of the data as well. So it's very much, accuracy is part of the whole ecosystem. It has to be timely. Obviously, up-to-date data has been proven statistically to be very predictive in helping assess people's ability to repay, part of the 5 C's that were mentioned earlier. Has to be sufficient, so it has to be sufficient enough to allow credit risk management. And I very much look forward to the debate with colleagues from the fintech area in the next couple of days around the sufficiency of data, because that's an interesting discussion. And time definite. There needs to be a length of time that you hold the data for, so that it is relevant and purposeful, as opposed to keeping it forever, in which case it could have a negative impact if there is more frequent and better data that an individual manages to get onto their file. Next slide, please. So let's just explore comprehensive information sharing. This is looking very much at data being provided not just from a negative, i.e. people not paying, but also from a positive perspective. There are studies which do prove that actually the more data that you have, the broader data you have, not just from financial institutions but from others, it does improve the acceptance rate for individuals, so it improves inclusion. And that's why we advocate data should be collected from all relevant possible sources, not just banks, non-financial organizations and alternative. And it's encouraging to hear that some of the fintech lending, for example, that is happening, when I spoke to a member of this conference earlier, is, I believe, being shared into the database here, because it's very important and will help further credit being made available. Next slide, please. This slide is basically showing where people are actually, the industry types that are providing data and those that are using data. And this is a survey of 190 credit bureaus globally as to the use. And it's a very busy slide, but what it shows is that obviously the majority of credit bureaus around the world hold data from financial institutions. That's not a surprise. What it shows is there's less holding of data from alternative data sources and non-financial sources. And so that shows the opportunity that there is within credit reporting systems in a number of countries to improve the level and coverage of data. Next slide, please. So let's move on to our second principle, which is around security. Security and data processing is extremely important for, as I say, all people that are involved in the credit reporting system. And I stress system and not credit reporting provider, which is the credit bureau. It's important that that data is secure, is processed in the right way, and that's irrespective of whether you are a central registry or whether you are a private credit bureau. Security is key. Security is key also to the data providers, as I've mentioned, and the users as well. And it's obviously an important area for authorities to make sure that they supervise that and enforce that. How that is done can vary. What we do see, though, is a trend, and I'll move to my next slide, please. What we do see a trend of, particularly around data security, obviously data privacy is the key regulation in a lot of countries which governs the use of the data. Some credit bureaus have specific regulation, but the majority actually are governed around data privacy regulation. The previous speaker mentioned the GDPR. Obviously, that's one of the main particular regulations. But the principle that's been applied in a number of countries, 70% plus of countries that have been surveyed that have credit bureaus, is one of, yes, privacy regulation, but also one of being set up that will enable the credit reporting system to function. So it recognises the flow of data that's required by, within the credit reporting system, and the regulation works with that rather than preventing it. So you see in a number of countries regulation being implemented in this way. Next slide, please. The other principle is around governance. It's important when you're running an organisation or running a credit reporting system, or you're a credit reporting service provider, whether that is a public registry or a private credit bureau, that you actually do have proper governance and risk management in place. You're talking about the livelihood of a lot of people's data in that, and therefore it's important that there are the right checks and controls to ensure that there isn't misuse or abuse of the data, to ensure accounting and accountability and transparency, proper risk management processes, and also fair access to all data users. These are areas which need to be implemented, again, in a proportional way that allows the development of the industry, and something, obviously, a lot of countries have done in different ways. Next slide, please. GP4, Principle 4, is around the legal and regulatory framework. There has to be and should be to protect individuals' data, and also to protect the financial system because of the criticality of credit bureaus and public credit registers. There should be a proper legal and regulatory framework, so it's quite clear what the rules are, what the rights and responsibilities are, that is predictable, so people understand what happens if they don't do something. It's non-discriminatory, so it's actually encouraging the development of credit reporting and the competition. Proportionate is a key word that we'll probably discuss quite a lot in the next 2 days, around making sure it is proportionate so that it does protect individuals, as data it is, and obviously financial system, but also enables the system to move forward. And obviously consumer orientated, as I've just mentioned a couple of times. We've just finished putting together some key principles for regulation and supervision. If I could move my next slide, please. And these fall into 12 different principles. There's quite a lot of detail on this, but we would certainly recommend, if you're in the middle of any regulatory or supervisory changes, that you refer to this, because I think it gives great guidance to local regulators and supervisors. But the concept here is it's not just about regulation, it's also about supervision. Regulation is fine, but if you don't supervise, have a supervisor working with that regulation to ensure that regulation is in place and adhered to, then that regulation is no good. So supervision is key, and that's something that we see a number of countries doing more and more, which is focusing more on supervision than the actual on regulation. A lot of them have good regulation in place, but rather than going down the route of putting in more regulation, they now focus more on supervision. And that supervision allows the development of the credit reporting system, and I think something hopefully we'll talk about in the next couple of days. And those principles fall into supervisory powers. So what should supervisors be doing, and also what sort of regulatory arrangements should be put in place. Next slide, please. Oh, I missed that slide, sorry. This is just further breakdown of the recommendations of that basis. So I think my slides are out of sync, apologies. Okay, let's move on to the next slide then, please. So GP5, as I mentioned, General Principle 5 is around cross-border, and it recognises, and this goes back to as far as 2009, recognising that you cannot trade across borders unless you can move data across borders, and because obviously that trade requires data, requires information, not just on businesses but obviously also on individuals as well. There's a lot of migration in this region. I fully appreciate that, with people working in different countries. So having some cross-border information flows is useful for those individuals to continue to develop their credit history and to develop their lifestyle. It is starting to happen in this region, I'm pleased to say. It was good to see that both Cambodia and Singapore recently announced a cross-border arrangement to allow data to be exchanged, which will help individuals moving. Hopefully we'll see more of that. But it is important that they are in place, otherwise individuals aren't going to move, aren't going to help with economies, people coming to this country, being able to access credit is going to help them, it's going to help the economy. Next slide, please. So, I'm just going to summarize my discussion on the principles by talking about the models. These models are things that have come from the and been discussed in the World Bank Knowledge Guide, which my previous speaker referred to. But these are the models that we commonly talk about within the ICCR. And there is no one-size-fits-all model because, as I mentioned earlier, there are different social and economic conditions in various countries that determine different models work best. So the ICCR does not advocate one particular model, but what it does try to do is suggest that there are different ways of achieving the objectives that you wish to achieve with a credit reporting system. So we actually see basically existence in countries a public credit register model, which may be on its own, may be the only database. We see in some countries private credit bureaus being the only database. We see in a number of countries what we call coexistence models, so where both the private credit bureau and the public credit register are working together. And one would argue that Indonesia has a coexistence model. But we also have a hybrid model. So what I'm going to do is I'm just going to quickly run through these models to give you an idea of how we see them operating. As I say, there's no one best model. Each particular model will work best depending upon the individual country's objectives in that sense. So next slide, please. So a credit registry model is quite simply this, where you have banks and other regulated entities providing data to a database, commonly run by the government, but sometimes run by an organisation on behalf of the government. Consumers may or may not have access to that data to see what data is being held. Sometimes if it's purely being collected for supervisory and macro financial purposes, they may not deem to be needed to have access. There are reports come out of those central registries, Sometimes they are just reports for lenders to give them some idea of benchmarking on their risk. And there are sometimes debt classifications. There are sometimes public credit registers who are providing reports back to lenders for risk assessment purposes, and I'll come on to those later. And then you have those users on the far right, which are the regulated financial institutions, banks, and that data is available to supervisory authorities. Probably a lot of familiarity with this model with what you currently have as a PCR here as well. Next slide, please. The credit bureau model is slightly different, obviously. Credit bureaus tend to work more on a micro level data because obviously they're collecting data to allow individual risk decisions by lenders and other organizations. So you tend to find the credit bureaus not just collect bank data, but obviously collect information from other sources where it's relevant. Again, going back to the principles of that. And they will collect that data, they will bring together that data with public data if it's available in the country. Sometimes that isn't or is available. And from that they produce the products and services that you'll all be familiar with, reports, scores, anti-fraud mechanisms, monitoring tools. And that their user base is much broader than obviously sometimes a public credit registry because it moves outside of the regulated entities into other types of organizations. These are potential users. I'm not saying they're users in every country, but it can be quite broad, even down to employment checking and tenant checking. Next slide, please. So now we come to a model really where you have both the public credit register and the private credit bureau working together. The ICCR in its guidance does quite rightly say that there is a role for both a PCR and a PCB in countries. So we acknowledge that there are specific roles for both and therefore both can coexist in environments, but it's obviously quite important when you have coexistence, a bit like when you're married. You know, you each work out who does what. And this is a similar concept here. So its assignment of roles and responsibilities is quite important. And we do see some changes in that, and we can discuss that in some of the sessions we have later. But here you see basically consumers applying to organize or data being provided into, so applying to those particular organizations, and they will then access a private credit bureau. You also see banks and others providing data to the credit registry. So you can see their regulated entities providing to both. Providing on one hand to the public credit registry, on the other hand to the private credit bureau. So there's a dual supply. And that's what they call a coexistence model. And then obviously from that you get, from a credit registry perspective, some of the reports and analysis that we've already discussed. And then you get the full service range from the private credit bureau. So there you see a coexistence model where two operations are fully servicing the marketplace from a regulatory requirement as well as from an individual lender and broader requirement. Move to the next model, please. We then move to what we call a modified coexistence model, and this is quite an interesting one where it's very similar to the previous model, but you'll notice that there the banks and regulated institutions provide data to the credit bureau, and the credit bureau then, either under regulation or an arrangement with the central bank, will be providing that information to the central bank for their particular purposes, the public credit register purposes that they wish to have and put in place. So this is slightly different where the ownership of the data and the processing of data is done through the Public Credit Bureau. The central registry actually benefits a lot from quite a lot of more granular data, broader data in the sense it's not just from lenders, regulated lenders, so that helps them even more with their role in terms of prudential risk management. And so the output is very similar to the previous model. Now, there is what they call a hybrid model. If I move on to my next slide, please. And this is very much a model that you can relate to from Indonesia, because obviously this model basically captures information from the regulated sector into a public credit registry, and that data is made available to a number of credit bureaus. And those credit bureaus then bring in other data directly, and from that then deliver the services to the end user, mainly lenders, but obviously sometimes to consumers as well. You'll see there that consumers don't necessarily have access to the public credit registry, but they will have access, should have access to the private credit bureaus. So as I say, there are a number of different models. There is no one right model, but I hope these models will help inform some of the discussions that we're going to have over the next couple of days. I'm very grateful for this opportunity to present the principles. I would wholeheartedly recommend that if you're involved in any discussions around credit reporting, you do use the website of the committee as a reference point. Certainly the principles, they're very comprehensive, it gives good guidance, but other guidance notes which have been produced on the back of the principles around specific areas. So please do use that. If I move on to my last slide. I think I'm pretty much on time, so that's good news. Thank you very much for listening this morning. I hope it's been relevant and useful to you for your discussions later. Peter and I, both from BIA, as you know, will be hopefully involved in those discussions, and I'm very happy to provide more background to that when those discussions take place. There is an opportunity, I think, briefly, if anybody wishes to ask any questions. Always difficult in a big audience like this, but if anybody's got any questions, maybe you could put your hand up and we'll find a microphone for you. If you're all desperate, well, I don't get a coffee break, I don't think, anyway, but if you're desperate to move on to the next session, then I won't take that as a problem. So, has there anybody got any questions? Good. Well, please, I'm here next 2 days. Any particular questions you feel you want to ask, didn't want to ask in an audience, please come and see me. I'll be happy to try and help. But in the meantime, thank you very much. Appreciate your time and effort.
All right, thank you so much, Mr. Munro, for the very insightful session. Also, yeah, you have received the token of appreciation? Yeah, okay, good. Okay, ladies and gentlemen, now moving on to the next session. We're gonna have Mr. Wait a minute. Okay. Proceed to the next panel discussion seminar, bringing up the topic of the role of public credit registry and private credit bureau in developing and supporting the financial ecosystem. The session will be moderated by Group Chief Data and Product Officer of Setos Digital Berhad, Mr. Ivo Kolev. Ladies and gentlemen, Mr. Ivo Kolev has 19 years of experience in the financial services, analytics, and credit reporting industries. He is currently Group Chief Data and Product Officer at Setos, where he oversees product development, data and analytics strategy and execution. His previous experiences, he was the General Manager and founder of PowerSpace Telecom data-based credit scoring business in Indonesia, Experian. He was also a head of business development in Southeast Asia, Experian. He was also a head of business consultancy in Southeast Asia, Experian. And previously, he was also the head of business consultancy, Central Europe and Middle East area for Experian. Ladies and gentlemen, without further ado, please welcome Mr. Ivo Kolev.
Good morning, the risks of live show. It's a privilege to be here, and thank you to the organizers for inviting me and at this remarkable event. Today I would like to introduce our esteemed panelists, starting with Peter Sheerin. Peter is Executive Committee member of Business Information Industry Association and has some remarkable experience with the World Bank as part of IFC in opening bureaus across the world. Hi, Peter. Good morning. Next, I would like to introduce Inku John. Mr. Inku he's an advisor of Asia Credit Reporting Network and veteran in credit reporting industry in Korea and very well known across Asia Pacific. Hi, Inku. Thank you for having me here. And I would like to introduce Mr. Vincenzo Resta. Vincenzo is Asia Executive Director at CRIF, with great experience across the world in the credit bureau, credit risk management industries. Good morning, everyone. So we will start with Peter, and now we heard from Neil on the 5 credit reporting principles, and Peter will deep dive into the roles of private credit bureaus and public credit bureaus and how those globally balance each other. What are the key models, what works well, what doesn't, and what can we learn from that? Peter, over to you. Can we show the slides, please?
Thank you. Thank you. First of all, I'd like to thank OJK and the other 3 credit bureaus and all the stakeholders that have made this event possible and for us to join and provide whatever sort of advice and support we can going forward. I just want to touch on from a global perspective. Can I have my first slide, please? And I just want to reiterate what Neil has already said. There are no right and wrong models. There are just numerous models. And I suppose, you know, it's always helpful to learn from history. The first private credit bureaus were established just a little bit before I was born, well over 100 years ago. But the first public credit registry wasn't established until the early 30s. But what this slide is actually showing is that, you know, if you have an appropriate and proportionate credit reporting system, it actually delivers value to the whole economy. You know, you have a public credit registry, you have private credit bureaus. They source data from financial institutions, businesses, and consumers. But one of the things that I've noticed over the years, that if you want an efficient and effective credit reporting system, then it's best driven by governance rather than by compliance. And by what I mean by that is if regulation drive stakeholders to do something, unless they see value, they will only comply to the lowest level that they can get away with. And when we're talking about credit reporting, someone a lot smarter than me said data was the new oil, and they are certainly not wrong. And when you look at things from a global perspective, and I won't dive deeply down into the slides, regulation can have both a positive and, I won't use the word negative because I don't want to be negative, but they can have restrictive impacts. Next slide, please. This slide just highlights how things can be separate but complementary, but are driven by the desire to have one achievable goal. Both PCRs, so the public registries and the private credit bureaus, have important but differing roles to play. And in some jurisdictions, they play very closely together in the sandpit, like nice, well-behaved children. In other places, there can be tensions between the stakeholders. But if you look at just down the left-hand side of the slide, you will see that there are focus areas, key focus areas of risk, data sourcing, the end users of data, products, and most of all, commercials. So when we talk about commercials, it's the cost of doing business. Public credit registries are primarily focused on monitoring the systemic risk. It's a great tool for the central banks to use to monitor regulated entities. It usually involves mandatory reporting of financial institutions. And the end data users, the central banks and policymakers, and it normally arrives at the Financial Stability Committee. I won't really go through all of the stuff other than, you look at the central banks and the public credit registry's role. They look at the big picture, and the private credit bureaus look at the more specific type borrowers. There are two issues that I'll reach out to a little bit later, and that is around consent and access to data. But I really want to make sure that everyone understands, with increased credit information sharing, it well and truly promotes financial inclusion. Next slide, please. This just really highlights the number of models that Neil mentioned, so I really won't go back and repeat what it is. But, when you look at the regulated entities that share data, in a hybrid model, it's primarily monthly to the public credit registries, but in a coexistence model, it can be separate they have two streams, one to the public registry and one to the private credit bureau. There are different ways to do that, either in bulk or via API. Pricing from both a public and a private perspective is always important. It provides funding for public entities to do the business that they do, but it is also a cost burden on the private sector. For most public credit registries, and I say most but not all, they have no or limited fees, and for the private sector, of course, the pricing for their services is negotiated with their members, so it's a value-added service. If they don't add value, then people aren't interested in buying the service. Consent, it's always an interesting topic. With PCRs, it's not normally needed, but in some cases it can be. But for the private sector, the model that works best is that the lender is responsible for obtaining and maintaining consent. The benefit and constraints, I won't go through them because everyone can see them. They're self-evident, so you can look at the slide. But one of the things I would like to highlight is whichever model you look at, the most that appear to operate best have a close collaboration and cooperation model rather than being based purely on a compliance dictate. Next slide, please. This, I think, is probably the real key because whatever model you operate, it's got to have a supportive and regulatory framework. It's absolutely critical. And when I talk about a supportive and regulatory framework, one of the words that Neil used, and he used it more than once, and I will use it more than once as well, and that is proportionate. Whatever you do, it's got to be proportionate. You need to take as much friction out of the process as you possibly can for the benefit of everybody. And when I talk about who is beneficial, The real beneficiaries of credit reporting are the public at large. They are the key beneficiaries. But, you know, when you look at the effective credit reporting systems, they need to deliver key outcomes. So we've just thrown up some bubbles and says, you know, fees, they're important. We need to look at fees to make sure that they are proportionate and that they in no way inhibit the free flow of credit information that at the end of the day benefits us and our fellow citizens. I think that's important. Consent, it's got to be obtained and maintained by lenders in a transparent way. Dispute resolution, you know, consumers must be able to dispute and have information corrected easily and quickly. In all my years of credit reporting, the elephant in the room that no one ever talks about enough is data standards and data quality. It is absolutely critical. And that goes back, you know, to the sorts of things that if you want to annoy your citizens, report rubbish data. They blame everyone. And that actually raises an interesting topic. When we talk about credit reporting, the system, it must be seen by everybody. So the citizen, from the citizens at large to the regulator, as a trusted third party, and everyone must hold hands accordingly. You know, data can be provided to the private credit bureaus and the public credit registries, and in some jurisdictions, statistical data flows both ways. If you look at terms and conditions, they must be transparent. The relationships between people that provide data and users of data and custodians of data, they must be transparent and enforceable. And regulated entities, they must, for the benefit of their citizens at large, for the economy, and for the way you want to behave and operate, they have to assist with the mandating of the participation in credit reporting. Now, I was part of the global credit reporting standards, you know, and the operations within the IFC, and we established many credit bureaus and public credit registries around the world. And when I first started, it was all voluntary. But what really became apparent was that if you left it voluntary, nothing ever happened in a timely fashion. So a decision was made, and everyone seemed to agree with it, that it should be mandatory. So participation and sharing of information, if you can mandate it for proper purpose, then that's a good step.
Great summary, Peter. Thank you. That's the global view of private and public registries. Now, going back to Inku, you've witnessed firsthand the evolution of private and public credit bureaus in Korea. Would you share with us your lessons learned and what can we take from that knowledge?
Thank you. Selamat pagi. Saya senang sekali bertemu lagi. So before getting started, so I'd like to share the long history about the credit bureau in Indonesia. First of all, I'd like to mention about Ibu Siti Faizilia, Deputy Governor of the Bank Indonesia. I met her almost 20 years ago. She's strongly, highly interested in building a world-class credit bureau in Bank Indonesia. And at that time, there is one gentleman, Rijana Noor, I like to mention. So he devoted his many things to build that kind of things. And also another director is Johnny Swanto and Dr. Wimbo, and also is Diffie. So also joined together at that time to build this world-class credit bureau in Indonesia. On the basis of their contribution, so OJK is established and also established its a select system. So I think is a BI generation is a past, and now is the OJK generation. So I like to share that kind of a history. So I was involved at that time. So that was my first time visiting Bank Indonesia in 2004. So almost 20 years. So I like to share my experience in Asia and also in Korea, including in Indonesia. Okay, so is everybody's nervous? So it's I think these about 1 million people are watching and listening. This is a seminar. So now you are is a special guest to be together with us today. Okay, let's begin. So, I have 5 slides. 5 slides are very, very important to my viewpoint. Evolutionary background of PCR and PCP. I hope you think together about this slide. In case of Korea, PCR actually is located under the central bank in 1955 and moved to the East Bank Association. And at that time is 1982. And then look at the PCB, Private Credit Bureau. KISS, NICE, SCI, that is called its Private Credit Bureau has been established at that time. So at that time, Private Credit Bureau, the database, almost 95% is dependent on the PCR data. So before the IMF era, Asian financial crisis, I was a loan officer in the bank at that time. So it's when we evaluate the applicant credit risk, we depend on the PCR data only. And after IMF era, what happened? You should remember that. Now you talk about the innovative credit scoring committee, something like that. So in Korea at that time, government ordered to adopt the credit scoring system in financial institutions. So at that time, I was in bank. And so I was in charge of the consumer banking. I never heard about the scorecard. Only I have seen the scorecard in the play golf. So we studied, work very hard. What is the scorecard? And then we found out CB score. So at that time, we were very, very ignorant. I have no knowledge about that. CB score, which bank build the CB score? They said Equifax, TransUnion. I thought Equifax was a bank at that time. So we learned, wow, credit bureau is necessary to run the credit scoring system effectively and efficiently. So we set up a credit bureau working team under the Bank Association. At that time, I was a representative of that team. Then, we decided to build a credit bureau. There was several credit bureaus. We decided to build another credit bureau, including the positive information at that time. So, and 2002, what happened? Credit card crisis. At that time in Korea, almost about 3 million people are bankrupt, insolvent. Well, we did not expect that at that time. So we benchmarked the JCIC Taiwan at that time. JCIC Taiwan at the time, they collected this credit card information. Oh, that's positive information. Then, so the government allowed to build another credit bureau. One is CODATA, another is KCB, to collect this positive information together. And then, so is a look at the PCR in Indonesia. Is Bank Indonesia 2006, is BIK, is a set up the SID system. And at that time, is BI member visited Korea, to do benchmarking for 2 weeks. There is a pioneer team, I think. They really studied very, very hard at the time. Discussed many things for 2 weeks in Korea. And then, so in the 2016 in Korea, what happened? PCR, KCIS, Korea Credit Information Services, has been established. It means independent corporation, not under the kind of the association, kind of the regulator. Now is the independent. Then, So in OJK is established 17 and set up the SLIC system. And also there are a few credit bureaus is established, PBK, KBIJ, CLIC. And in Korea, last year, the government is started to issue another credit bureau license, SME. It's focused on the credit card companies because they have the merchant data. And another one is a specialized credit bureau, is Alta CBs. So in Korea, the license has been split into 4 parts. One is the consumer, second is corporate, third is the SME, and fourth is the Alta CB. This is the whole picture of the PCR and PCB. Next slide.
Inku, that's a great summary of the development of the bureau industry in Korea. If you were to summarize the learnings of your experience, what are the highlights you would like to share with the audience?
Thank you. It's a good question. So before forgetting, so in the look at the Asian financial crisis, what was the lesson? We adopted the credit scoring system. We learned credit bureau is necessary. And also, we acknowledge it. Data analyst is necessary. To do that, we need data. So, in the credit card crisis, the lesson, not only negative information, we need positive information as necessary. So that was a lesson. But think about that. I don't know, in Indonesia, only the top 20 banks is using the automatic lending system. And the other banks are lending systems are based on these manual procedures. Even if the government is set up these huge databases, if there is no data analyst to use the data, in that case, that's useless. So important thing is the foster is a data analyst inside. That's very important. So we fostered many data analysts inside. So now is the capability to handle these big data. That's the lesson.
So that leads us to value-added products and services conversation, which is typically in the area of private credit bureaus. And Vincenzo, as CRIF is a global player, very well known in the private credit bureau industry, what would you like to share with us as key highlights and experiences from your side?
If we can put up the slides, that'd be great. The first thing I want to talk about while they load the slides is I need to destroy 3 myths to begin with. And 2 of these have already been done, fortunately, by Neil and Peter. So if we go to the slide number 2, actually. Thank you. We can go to the next slide. And the 3 myths are, 1, that PCR and PCB are in conflict with each other, and I think we've already had presentations that destroy the myth. The second myth is that they are the same thing, which is also something that's already been addressed. The third myth is I'm not here to make a pitch for CRIF and for our credit bureaus. I'm just here to talk to you about how we've addressed this. I've personally been involved in establishing 14 private credit bureaus and 7 public credit registries, so I do have a fairly good idea of the different models in the world. Next slide, please. So there are some key distinctive elements of a private credit bureau that we have. Next slide. And these distinctive elements is a bit of a chicken and an egg approach. Next slide, please. Where there is either the lessons learned that form our belief system, or is it our belief system that led to the lessons that we learned? Next slide. But essentially, the key lesson learned are, 1, that you need a tailored approach. We've talked a lot about how there isn't a single successful model. That is true, but you need to replicate something that works, right? The second one is technology as facilitator. Third is continuous improvement. And fourth is the customer service. Next slide, please. In terms of tailored approach, as I said, one model doesn't work. Just like one model doesn't work for everybody, or there is no perfect model, rather, there is no perfect credit bureau system either. But you need to make sure that your system works, so you don't want to create it from scratch every time. So our approach has been to develop a system that is built on 2 layers. One common layer, which is the same across all of our countries, and a second one, which is instead a customization layer, which is specific to each country. And this goes in terms of the basic data that you're getting, but also in terms of the score. We start with a global score that then gets tailored as data comes in for each country. So you can start with a score from day one, and yet you evolve with local data, as well as the value added. We have a timeline of which value added should be introduced to the market, but obviously that varies from country to country. Next slide, please. And I'm going a bit fast because I'm mindful of the time. The second element is that technology is a facilitator. The first thing when you think about a credit bureau project, it's a business project. It's not an IT project. It's a business project. But obviously, it's heavily reliant on technology. You shouldn't fall in love with the new technology because it's a buzzword. You need to understand how to utilize the new technology to achieve the business need in the country. So because it's a business project, because again, we have this bottom layer, which is a technological platform, which evolves with technology over time, it allows us to evolve technologies for all of our bureaus at the same time when needed without changing the customized approach. At the same time, by having the customized approach, by being a data-driven business, we're able to take local data and evolve them as technology allows us to do it. Next slide, please. The third component is very important, and it's continuous improvement. Continuous improvement, Neil mentioned, made the analogy of a marriage, of a wedding, right? I want to follow that because as my fiancé often reminds me, you don't make a woman fall in love once, you make her fall in love every day. And I think that's the same concept in credit bureaus. The role of a private credit bureau is you need, because as Peter was saying, you're delivering value to a client, value changes over time, you need to adapt and change over time. You need to evolve and you need to come up with new solutions, new values, new methods to use the value, and referring back to the technological improvement, new technology to achieve that. Next slide, please. And the final one is about customer service. And the point here is, again, going back to the first point that I made, it's a business project, so you need to understand the business need. The second point was business needs change. You need to be in touch with those business needs. You need to evolve your solution, but more importantly, you need to keep listening to your client. By keep listening to the client, and again, for a private credit bureau, the clients are two. It's the members of the bureau and it's the end users that are the end beneficiary, as Peter was mentioning earlier. And so as private credit bureaus, you need to take their role extremely seriously because that can mean the long-term success or failure of your project. So essentially, you become a partner in the ecosystem. We are building financial infrastructure and we're members of that ecosystem of financial infrastructure, and we need to take the role as partners really seriously, not as serving a client, but as partnering with them to evolve the situation. And final slide, please. So in summary, as private credit bureau, we really have this mandate to push towards continuously providing value-added, innovative solutions, services, and also to continue to solve new business needs. I've been at different panels and discussions with some of the same members here, where for the last 15 years, maybe we've been called dinosaurs of the industry and every day we think we're going to be replaced by somebody else. But the reality is, by keeping listening to the business needs, keep adapting to new technologies and to new needs, credit bureaus, both private and public, are still extremely relevant, and they still solve a business need. And as long as we do that, we'll be here for many years complaining about how the dinosaurs didn't quite die out yet. So thank you very much.
Thank you, Vincenzo. Some great points there. So we're open for questions, and while we collect questions from the audience, I have a couple of points for our panelists. One is the role of consent. So we touched on that, and first to Peter, what is your experience in good consent management and suboptimal consent management? What are the impacts on the industry from what you've seen globally?
Well, certainly, I try and look forward and say, well, what are the lessons of history? And, you know, consent today wasn't consent many years ago. You know, consent many years ago was, you know, you signed a piece of paper because if you didn't get a loan. It was as simple as that. And I suspect that's probably the same in reality nowadays. But consent has changed. You know, there are different sorts of consent now, electronic and implied and all that sort of stuff. But, you know, consent, the people, it's got to be informed consent. People need to understand what they're doing and the benefits that flow from their giving permission to share their data. But I think one of the interesting things when you look at consent, and if you look at, say, what we're talking about now, consent, what actually is it? Is it a one-off consent in respect of that particular, getting that particular piece of data or sharing that particular piece of data? Is it an enduring consent so that the users of that data can use, say if you're a bank, use that data to maybe potentially review that account and offer additional funds or whatever? Or does it expire? And people can withdraw consent? So, sorry, there is no answer other than whatever it is, it's got to be well thought through and meet proportional global standards and actually work. Normally consent is the responsibility of the lender to gather and to maintain. Not, you know, I don't see a lot of benefit in practice for credit bureaus to be the custodians of consent. So if, you know, there are a small number of markets that say the consent must be held by the credit bureau. I see no benefit in that at all. What I do see benefit in is if the regulator or auditor or the consumer whose data we're talking about wants to challenge their consent, the credit bureau must have the ability and the obligation to be able to go to the initial submitter of that data and say, prove to me that you had consent in the first place. It goes right back to the original holder. So,
yeah, good point on consent being traceable and pragmatic to the industry. And
yeah.
Inku, what's your experience on consent management, as Korea is one of the most sophisticated digital economies and you evolved through that process. So would you share with us how is complex consent managed in Korea?
As we've explained, it's a consent, so may I explain about the remaining? It's a slide, it's 1 minute. Yeah. Could you allow?
Sure.
Let's give the
Could we have Inku's slides, please?
slide is the remaining slide I need to explain to all the audiences. So it's within 2 minutes to give these generate these another questions from the audience.
2 slides, that's mine.
Because of his time is limited, I did not finish this my whole slide, so I talked very much about this first slide and second slide. And so the remaining slide I want to share with you is within 1 and 2 minutes. Then, so I want to explain about this consent of this PCR and PCB. Okay, this is the example of a PCR, the evolution. In case of this Korea, actually before the 2015, there was the PCR under the Bank Association, but the government ordered to set up the independent PCR corporation, name is KCIS. So we look at the picture. It's not only the bank information, it's insurance information, technology information has been aggregated all together into this under this one PCR. So it's a next slide. So now is the KCR is position. Next slide. As you see this under one roof. There is a credit information databases and insurance information and technology information. The role is different. And also there is a big data analysis to support the open banking system. Next slide. And this is another example of the private and public partnership delivering its value. The core data has been established. It's by the government. So it's a focus on collecting the SME data. On the basis of that is that financial institutions has its chance to enlarge these SME loans within short time. Think about that. Without the government support, it is impossible to set up this kind of databases to use the data analytics to evaluate the SME ratings. So it could be a very good example for the Indonesia. And larger slide. As this lesson, and in the backbone, credit bureau is backbone, I think. So it's collect as much as possible. So PCR is what kind of data should be collect. PCR is easier to access to public information. That's why PCR. So if this PCR can collect this BPJS, something like that, or it's as a new merchant, is a non-financial data. It's very useful. And PCB is shared. And also the PCR supervised closely. It means we need to catch two rabbits with one stone. Protect the privacy and also to promote the free flow of information. So coexistence of law and regulation. Law belongs to the regulated PCR. Technology belongs to the PCB to provide the value-added services. That's the last lesson. That's all. So, thank you. The summary is as Nirman mentioned, there's no one solution. You need to build your own type of backbone. To do that, I want to think many things. It's a legal aspect, technical aspect, operational aspect, economic aspect, social aspect. All things should be considered all together. This is the kind of Pancasila and also the Bantung spirit. You should have love the people. To do that, what we should do. That's my experience and philosophy.
Thanks, Inku. Do we have any questions from the audience?
Can I just make one follow-up to this point about, we also do need to separate between consent, individual consent going forward, and consent on aggregate data going backwards. I mean, we live in a world where everything we do is data that is being used by somebody for something, and usually either without our consent or with a quick click because we don't want to read 500 pages of legal wording, right? Instead, in our industry, we treat consent quite seriously. The point, Peter, you made is absolutely right. It needs to be traceable. It needs to be there. What I would still make an appeal for is, we talked about the role of credit scoring, and credit scoring will rely on alternate data, and that data requires consent. It's one thing to say, going forward, I no longer want my data to be shared, but if I've built a score on data and I withdraw consent, and the bureaus have to go back and remove the data and recalculate the scores and change their models, that's a mess, okay, right? So there is a level at which you cannot push consent to the point where it actually becomes negative for the industry.
Yeah, definitely got to keep it pragmatic. And Peter, I know you have some views on that.
I'm working for the World Bank and small Pacific Island countries, moving the existing negative-only credit bureaus to positive, repayment history information. And when we talk about small economies, you look at Tonga, when everyone is at home, which isn't very often, there are 170,000 people. We have an active credit bureau. But we also have a lot of unserved and underserved people within the community. So it's very much a cash and carry economy. And I think we sometimes tend to forget about the folks that could benefit most, which are the people out in the provinces, particularly women, and minority groups who actually have existing credit relationships. They're not traditional credit, but they pay for their electricity and they pay for their power. And what we're looking to do in the Pacific is under a mantra that I've sort of invented is public benefit and public good. And in the Pacific, there are both public entities that provide electricity and water, and public and private both do it. But they operate under a social license. It's a natural monopoly. And what I've been promoting is that they hold key data in respect of their customers. They've got a name, okay, may not necessarily be the name, but the water goes to a place and someone pays the bill. So that's valuable data. Mobile phones, most of it is prepay, but they want the technology people say, yep, we're prepared to share the data. To try and get consent to share that sort of data will never happen. I've been talking to the 3 central banks and all the stakeholders under this sort of mantra of public benefit, public good, because the beneficiaries will be the folks whose data we are sharing, and everyone thinks it's a good idea that we create this new model where public notification on your bill or through public comment and through the newspapers, that data will be uploaded into the credit bureau. Because a lot of it, if you don't pay your water or don't pay your power, they use up your deposit and then turn you off. We're not interested in the folks that are turned off because they'll be sub-obvious. But what we're saying is it's a credit record that could be considered for public benefit, and we accommodate the consent requirement and that it's publicly notified.
And is that data collected by a private bureau or the government registry?
The government don't have the capacity to run. So in that particular model, what we say to the regulators, and we're talking about central banks here, is we want to get as much data into these little private credit bureaus, and those private credit bureaus will provide statistical data to you to oversee the financial system as a whole, not just the banks. Because what we find in the Pacific, and it's no different here, that a bank can be unstable because of the behaviours of their customers. So if a particular lending institution doesn't get paid by 1 or 2 of its big borrowers, then everybody fails. You know, it's a loss.
Great example how these people wouldn't have access to credit if their utility transactions weren't available in the private credit bureau.
And one of the other things that is sort of the other leg to the stool is, you know, the water and power, particularly water. It's a commodity that everyone needs, and it's very expensive to deliver. And, you know, not everyone pays. And you get to a village and you'll find that the tap on someone's house might have half a dozen hoses going right down the street. It's just shared water. But, you know, the thing is that those deposits, if we could find a way that the $200 that sits in the water service provider, if we could reduce that, and everyone has to pay their $200, even if they don't pay, you know, if they pay their accounts, their $200 still sits there. We're just sort of saying, well, hey, if we could reduce the need for deposits by half, what that would do for the economy at large, those funds could benefit everyone.
Some great insights here. I think we're out of time. All of us are here for the next 2 days, so happy to receive questions at any point in time. Thank you. Thank you, gentlemen.
All right, and for the moderator and speakers, we kindly request you to stay on stage to take a group photo. Sorry, gentlemen, please stay on stage. We're gonna have a group photo. All right. Okay, on 3, 2, 1. One more time. On 3, 2, 1. Please give a round of applause, ladies and gentlemen, to our moderator and speakers in this session. Ladies and gentlemen, please kindly take your token of appreciation from Miss Haura. Yeah, okay. Thank you very much. Okay, ladies and gentlemen, we are now welcoming panel discussion with the topic of the role of credit bureau and regulator in Malaysia. This session will be moderated by Executive Director of Creator, Mr. Wong Pao Min. Mr. Wong Pao Min works closely with Creator's Credit Bureau Investment to lead strategic growth initiatives. Prior to Creator, he was a principal at Boston Consulting Group in Kuala Lumpur for 9 years. He brings with him a range of strategic and operational expertise, having led execution and advice for clients across Southeast Asia in financial services and the public sector. Pao Min holds an MBA from Haas School of Business, University of California, Berkeley, and completed his undergraduate studies at the University of Cambridge. Ladies and gentlemen, please give a warmest welcome to Mr. Wong Pao Min.
Very good morning, honorable guests and fellow speakers and moderators. Firstly, I want to say a big thank you to OJK for inviting and allowing me to host this panel discussion on the topic of the role of credit bureaus and the regulator, as well as the development of the credit reporting industry in Malaysia. It is truly a huge privilege to be able to host this session, especially with the presence of two very highly esteemed panelists and speaker who has huge and long industry experience in the credit reporting sector in Malaysia. So without further ado, let me first introduce Mr. Toh Hock Chai. He's currently the senior advisor to China Construction Bank. And prior to that, he has over 30 years of experience at Bank Negara Malaysia, of which the most recent 10 years he was playing the role as a director of Statistical Services Department of Bank Negara, providing statistical reports to support macroprudential policies, as well as managing the operations of Bank Negara's CCRIS credit registry. Outside of Bank Negara, Mr. Toh is also has held leadership positions in various international statistical groups, including Vice Chair of Irving Fisher Committee on Central Bank Statistics, as well as the Chair of ISI Southeast Asia Regional Network. Thank you. Secondly, I would like to welcome Mr. Eric Chin. Eric is currently the CEO of Sitos Data Systems in Sdn Bhd, one of the 8 licensed credit bureau in Malaysia. Mr. Chin has over 15 years of strategy, management and operational experience in the credit reporting space. Before Sitos, Eric was actually a CEO at Credit Bureau Malaysia, where he was instrumental in establishing the country's first SME-focused credit bureau. Thank you again for welcoming both our speakers and panelists on the stage. So before we start, perhaps I could give everyone here a quick snapshot of the credit reporting sector in Malaysia before we deep dive and hear from the perspective of both Mr. Stoh and Mr. Eric Chin. So in Malaysia, the credit reporting agency actually started more than 30 over years ago. Started out of the need for banks to have a third-party reference to check on potential applicants. It was actually only in early 2000, before the public credit registry was set up, while the private sector has already established a negative database where the banks were using. And only after the introduction of the Credit Reporting Agencies Act 2010 in Malaysia, where the industry really started to flourish, the private credit bureaus started to move into comprehensive credit reporting, positive data access, and especially in the last 10 years, there's been an accelerated transformation of the sector, thanks to leading credit bureaus such as CITOS in rolling out new products and services in the market, really engaging the banks, as well as central banks' position in supporting the sector to develop for the benefit of the financial ecosystem. So let's hear it from the perspective of Mr. Toh first. Could you provide us perhaps with a macro view of the development of the credit reporting industry in Malaysia, and specifically the history of Bank Negara's CCRIS database? What was the purpose of it in the first place, and how has it developed?
Okay, a very good mornings to all our friends here. Okay, this is my third time to Bali. Of course, my previous 2 times was with Bank Indonesia. Okay, now I'm very glad to be here to share my knowledge and experience with OJK now. Okay, of course, I need to thank Ming for giving me the chance to share my knowledge based on my past 33 years of working experience with the central bank, Bank Negara Malaysia. Okay, so I have retired from the bank, okay, a few years ago. Okay, so I'm sharing as a personal capacity, not representing Bank Negara, but I believe my journey in the central bank for the past 30 years, including 10 years leading the private credit registry experience, probably will be useful for all our colleagues from OJK and other industry players in Indonesia. Okay, so as a central bank, I may use the word we, but doesn't represent that I'm speaking as a central banker now. Okay, since I've been 30 plus years with the bank, I still believe Bank Negara is my home in the sense. Okay, so as a central bank, okay, definitely we need a lot of credit information. Okay, way back to 1982, empowered under our Central Bank of Malaysia Act, 1958 then, now has been revised to 2009. We are empowered to collect all the credit information, individual account from the banks, from those regulated by us. Okay, if you compare with other power that we have, okay, I mean, as a central bank, we are not empowered to collect all the depositors' individual information. So there's a difference. Why central bank empower the CBA empower the central bank to collect individual accounts of the borrower, okay, purely or solely to play the role of credit bureau in a sense, okay. So during the time, of course, 1980s, 1990 until Y2K, or for those who are born after that, maybe many of you are here, okay, it was hard copy submission, okay, and there was a threshold because of, volume. And the time also, it was 1 million is considered very big, 30, 40 years ago. Okay, so the threshold was starting with 1 million for commercial bank and 500,000 for finance company. Every accounts had to be reported to Bank Negara, NPLs all are reported. But during the time, it was not so, focus in trying to play the role of a credit bureau, but more to support the banking supervision activities. Okay, so because during the time you don't have a platform to share all the data to the industry, okay, and during the time it was upon request to a phone when the bank called to inquire, then the central bank can answer accordingly, even up to the 1990s. Okay, so the turning point was the setting out of Central Credit Information System in October 2001. Okay, that was about 20 years ago. That was the first time we have kind of a full-scale PCR in the sense. So we collected all the information, okay, every account, irrespective of value, even 1 ringgit, also we include them into the reporting requirement. And all the credit cards holders are included as well. Okay, so with that, we have actually established a very, very good and comprehensive database by getting individual accounts, okay, with the borrower's information, detailed information up to the so-called name, identity, etc. And from there, that data are being accessed by the banks, particularly. Okay, at the cost recovery rate, in a sense, very cheap in a sense, so they can assess if they have a new application, and they can also go online to access to the data if they want to conduct a credit review of their customers. Okay, so by facilitating the gathering of all this data, the Act also protect the bank, the central bank, from being sued, because we are just playing the repository role to facilitate credits, what they call it, referencing. So even the Act actually has a disclaimer in the sense that the central bank will not be sued if there are wrong data being included in the credit report. So the problem is a reporting party in that sense. Okay, so even when we give the credit report to the customer or to the bank, there's a clear black and white disclaimer clause stated in the credit report. Okay, so otherwise probably there could be many what they call it, complaints or issues to be handled by the central bank. Okay, I think from there onward until year 2010 and up to even 2014, before CTOS was fully what they call it, operationalized as a full-scale what they call it, a credit bureau. So basically, our secret system dominated the so-called credit reference industry in Malaysia. Practically all the banks, not only the bank, some other credit grantors also participated in the secrets as well. So the participation is subject to the data quality requirement or the specification, submission timeline, and on a reciprocal basis, they are allowed to access to the information to conduct their review of their customers or to onboard their new customers. So that's why some of the credit and leasing company, those providing credit leasing to the motor vehicle, they also participate in the secrets platform. Okay. Of course, the challenges to these parties are that the data quality, the security of the submission, and also the so-called integrity of the information sometimes could be challenging in the sense, because they are not like a bank, which can invest a lot into the processes, into the system, into the effort to look at the data. So, of course, CTOS has existed prior to, before secrets was set out, and also there are some other smaller specified area, those like motor vehicle, they have been playing the role more like a club arrangement, and those participating bank can access to the same information. But they are not comprehensive because they don't have the credit information of the whole financial sector. So that was the difference. Of course, the next transformation was the CRA Act, in the Credit Reporting Agencies Act, okay, came into effect in 2010, okay, but operational a few years later, okay, enacted in 2010. But that act is administered by the Ministry of Finance. It's not the central bank. Okay, so licensing or registration of the PCBs are done by the Ministry of Finance, not the central bank. Okay, so currently, as of today, Malaysia has 3 full-scale, okay, PCB in the sense. Of course, CTOS is the leading the pack in the sense they provide comprehensive PCB, credit health check, credit scoring, etc. But there are another 2, And the difference between these three and others smaller credit bureaus are that they have agreement with Bank Negara, okay, to access to our information, the credit information we collected from the bank, so that they don't go to the bank to collect the same information again. So with the customer consent, they access to the secrets database on demand. So it's not the whole set of data. So if they are doing credit review for credit scoring for some of the bank, then with the consent, they will ask for the set of data. In fact, the central bank has been putting a lot of effort to promote the growth and expansion of the PCB in a sense. Even way back to 2008, before even the Credit Reporting Agency Act was put in place, so Bank Negara has facilitated a setup of SME Credit Bureau in Malaysia. So in cooperation with the Credit Guarantee Corporation in Malaysia. So that was actually the first PCB in Malaysia even before the act was enacted. Okay, but that didn't make significant progress during the time. But in the last, I would say, 10 years, PCB have actually playing a very, very important role in contributing to the ease of accessing to finance, okay, and in terms of cultivating a very healthy and good credit culture in Malaysia, okay. Instead of that's why even you look at the NPL in Malaysia, actually is very, very low in a sense. I think significant contribution is from the secrets as well. I think with that, I pause at the moment. Maybe I hear from...
Great, thank you very much, Mr. To, for the background.
Other
yeah. So I think you touched on quite a number of interesting developments from secrets being set up in the early days, providing data to the banks, eventually allowing access to private credit bureaus as well. So we'll come back to some of those points later, but maybe now let's hear from Eric, specifically in terms of the evolution of CTOS. How has that been? And in terms of the value add and how you serve the market, what were some of the key focus areas for CTOS, and in terms of how you help your various stakeholders, be it consumers, SMEs, or even the lenders themselves?
Yeah, thanks, Pak Min. Selamat siang, Bapak-Bapak, Ibu-Ibu. Terima kasih kepada pihak OJK kerana sudi menjemput saya untuk menghadiri majlis hari ini. So thank you very much. So I think thanks to Mr. To and for giving such a extensive background on the development of the private credit reporting agency in Malaysia, right? So I think when we talk about CTOS, right? CTOS is among one of the oldest credit reporting agency in Malaysia, right? We have been around for over 30 years, right? Those days, before regulations were put in place in 2010, we were known as credit referencing agency. Some people call us credit information provider, credit aggregators, right? But essentially during those days, right, I think the existence of credit referencing agencies was essentially to address two key gaps in the market then, right? So during those days, I think Bank Negara secrets was available, right? However, the data from Bank Negara secrets is only accessible by banks and financial institutions. So one key gap is essentially for the non-bank credit grantors. How do they actually assess creditworthiness of their potential customers, right? And that's where people like us, CTOS, we play a part. Now, in terms of the development of CTOS, although we have been around for the last 30 years, I would say the transformative journey of CTOS, right, happened maybe in 2014, right, when a regional private equity firm called Credor, right, I understand that they are also here in Indonesia and playing a big part in terms of development of some of the SMEs, right, to bring them to the next stage. Together with Credor, I think the management team in CTOS started what we call our transformation journey, right? And the transformation journey today is 9 years old already, right? So I've been with the organization since 2014. And essentially, the journey is how do we actually provide value-added services to our stakeholders. Now, the stakeholders broadly can be categorized into three, right? The banks and the lenders, right? Number two is the SME market. And thirdly is, of course, the consumer market. And I think if you were to look at what we provide to these stakeholders of ours, right, is essentially, number one, supporting our customers through their entire end-to-end life cycle, right, of customer and credit risk management, right? Starting, from lead generation all the way to supporting them in digitization to onboard their customers through digital means, going through credit, fraud, identity assessment, all the way to portfolio reviews and going even into helping them optimize collection, right? So essentially that's one area. Number two as well is empowering SMEs and consumers in Malaysia, right? And I think one key area that we focus very much on is essentially how do we empower SMEs and consumers with, number one, education, right? Awareness and education of the importance of having good credit culture, for example, right? And how it helps them obtain access to wider and easier financing. So I think that's one very critical area. The second thing is providing them with credit tools to support the education that they have obtained, right? And these credit tools include things like, for example, for a consumer, right, providing them with not only their credit report with credit information, but at the same time providing them with credit score so that they understand their credit information better. Today, if a consumer gets a credit report with lines and lines of information, how they have been paying back their credit card, their mortgage, so on and so forth, it doesn't mean anything to them, right? For a consumer, what they want to know is, am I rated as green, yellow, or red? Am I good or bad or in the middle, right? And then the second thing is, how do I improve, right? So we spend a lot of time in terms of, working together with other stakeholders, like the government agencies, in educating, right, consumers, providing them with tools, and finally, providing them advisory services as well, right? And I believe over the last years or so, right, as part of the transformation journey, right, I think, the public as well, the regulators that we work with have a good view of, in general, the credit reporting agency, the private credit reporting agency in Malaysia, but at the same time, for CITOS as well. Right. Thank you.
Great. Thanks, Eric, for that. So we've heard from Eric's perspective, what CITOS has been providing to market and so forth. So I want to take a step back into to talk about the role of CCRIS and CITOS in the market, and trying to understand perhaps from Mr. Toh's perspective. From Bank Negara's point of view back then, what was the thinking? Was it by design that you wanted CITOS and private credit bureaus to perform a certain role in the market, be it providing value-added services in terms of fraud ID and so forth, versus what the public credit registry, CCRIS, should be focusing on?
Okay. If you look at the case of Malaysia, I would say the PCR is intentionally playing a so-called a complementary role and not basically playing the role like a full-scale PCB. Okay, if you look at even within the Bank Negara website, we will always express that all the information in the CCRIS or in the credit reports are facts. Okay, we only give facts, be it positive or negative. So we don't have any opinion about the credit standing of the person. So basically, as a regulator, we, by design or deliberately, not to put in judgment about the credit standing of a particular consumer or corporation. Because when we look at it, we just want to make sure that the PCB, okay, can grow and play their role effectively to basically also help the central bank to promote financial inclusion, to facilitate consumer access to the credit, or the SME to access to the credit based on their track records. Okay, so to answer that question is by design, so that the central bank not playing the role like a PCB. Otherwise, there will be some concern in the sense that one is that we are giving judgment. I mean, the central bank giving judgment. Then how will the commercial bank behave, or the credit grantor? Okay, and that could be a moral hazard to the central bank in the sense that if I give Pao Ming a rating of 10 out of 10 and give him a rating of 5, a credit scoring, okay, and then they access to the database and look at the result, and they grant a loan to him based on that score, because it's a central bank, it's a regulator. I must trust the regulator. I mean, that mindset is still very, very strong. I believe in Indonesia it's the same. Okay, then don't give the credit. At the end, if they say the credit granted became an NPL or failed, then who is going to be responsible? I don't think a regulator will not want to take that responsibility, because if the regulator is giving a assessment, a score, so in some sense, my personal view is that basically we become the person who decide who to grant the loan, instead of based on market and commercial decision. I think that is a very important point. So, of course, just now we listened to a previous discussion. There are different model, etc. But in the case of Malaysia, the central bank will not have any judgment on the credit standing. They only facilitate the collection of data, because all those individual accounts, those credit data are needed by the central bank to ensure financial stability, okay, to play the role of micro surveillance under the supervision, macro surveillance for financial systemic risk, etc., and also prudential purposes. So basically, I mean, if you are a central bank, or even you are OJK now, you need those information in micro details, okay, so that you can know the significant activities, you can conduct analysis, you can or even do stress testing, okay. Even within the central bank, because Bank Negara is playing the role of monetary stability and financial stability, so the data also being used for monetary stability. Look at the household debt, the significant borrower, etc. Okay, so that is.
Got it. Thanks for clarifying that, Mr. To. So sounds like from a credit risk perspective, Bank Negara's thinking was that as a PCR, we are providing data, but not judgment. That is something that the private sector needs to take on. The other role that Eric touched on earlier is also in terms of creating the awareness in the market, financial awareness, credit awareness among SMEs and consumers. What's your view on that? Is that something that the PCB has the capacity to take on, given that you need to go out to the market, undertake marketing campaigns, outreach, and so forth? Or is that something in the realm of what the PCR should be doing?
Okay. Within Bank Negara, of course, if you look at our mandate, we also want to promote financial inclusion. Okay. If you look at our CBA 209, okay, it's a clause stating that we have to play the role. Okay, so we also have a department that basically try to promote financial inclusion, look at the assessing the financial inclusion, and look at the ease of accessing to finance. And of course, we also have another department within the bank that talk about financial consumer education and market conduct. So in the financial education, try to enhance financial literacy among, the consumer, among the SME in particular. Okay, so basically, the central banks is playing that role. Of course, when you talk about PCB, my personal view is that probably this is one area the PCB can be playing more an active role, because PCB's role is to basically develop good credit culture, okay, in a sense, so that only those who are really able to pay back or need the financing can access to financing, okay. And of course, in SME, most of the time, they have problem to keep their financial record properly. They have problem to keep their account properly. A lot of time, PCB can play a role to help in the sense, so that they can also using the scoring for ease of accessing to finance. So basically, if you ask me the question, in summary, I would think PCB can play a role to help financing
Inclusion
in
and
a sense.
yep. Okay.
So that SME and consumer can also improve their literacy in terms of managing their finance.
Correct, correct. So it sounds like there are some areas where there needs to be a bit of clarity in terms of what the PCR does and then how the PCBs will complement the PCR. And in some areas, it's actually a much more collaborative. Both have equal responsibility to drive a certain agenda, especially in terms of credit awareness, financial awareness, and financial inclusion. So maybe that basically signals to me that it requires actually a fairly close working relationship between the PCRs and PCBs. So maybe, Eric, could you perhaps comment on sort of your working relationship with Bank Negara? I don't mean to put you on the spot, but just perhaps just in general, how has BNM supported the PCBs in Malaysia in achieving some of those common goals?
Well, I think the model that I think Neil spoke of just now, right? I think in Malaysia is essentially a coexisting model, right? And I think it has been working well, I think since 2010, right? Whereby, the private credit bureaus get access to Bank Negara's secrets, right? In raw data format, right? And at the same time, the private credit bureaus, right, are mandated, right, to develop value-added products, solutions, and services that is value-adding and provides benefits, right, to all the stakeholders, be it the lenders, the SMEs, and the consumers, all right? No, from CITO's perspective, I think, we are definitely very encouraged with the supportive and very, very, transparent working relationship that we have with Bank Negara. To a certain extent, they are also our regulators on top of Ministry of Finance, right? And I think what we do is that we actively engage with Bank Negara Malaysia whenever any new products, or solutions about, to develop any new products or solution. I mean, as an example, right, a more recent example would be CITOS today provides eKYC solution to the banks in Malaysia, right? And what happens is that for us to actually come to get approval for the eKYC, right, we actually went into the Bank Negara sandbox, right, for a period of 1 year to test the solution out with 8 pilot banks, right? And through the engagement with Bank Negara and working closely with them, we understand some of the requirements for a robust and secure eKYC, but at the same time, the needs to actually ensure that the eKYC is able to accelerate, right, onboarding, right, without the need for a physical branch network. And I think from that itself, Bank Negara actually released a eKYC guideline in 2021, right? And from there itself, it also opens up the door for, the digital banking, framework. So today, as perhaps you are aware, in Malaysia, there are already 5 digital bank licenses that have been awarded, right? And some of these digital banks are targeted to go operation by this year itself, right? So there's actually a lot of interactions and a lot of engagement before any products are launched. Now, at the same time, of course, one of the mandates that Bank Negara expects from private credit bureaus is also in terms of consumer protection, making sure that there is consumer redress mechanism put in place, right? And I think it's a very, very cordial, I would say, right? Cordial and working relationship today that we have between the between the PCBs and the PCR in Malaysia.
Got it. Thanks, Eric, for the insight. I just want to touch on two specific topics that the prior sessions have spoken about as well, specifically around, number one, the consent mechanism, and number two, data security. So perhaps, Eric, could you maybe explain to the audience here, how does it work in Malaysia in terms of consent requirements? What are the obligations placed on PCB versus the lenders? And then also on data security, how does Bank Negara impose certain expectations on data security to ensure that despite having access to fairly sensitive data from central bank, the private credit bureaus are able to manage that in a way that doesn't inhibit your ability to build products on top of the data?
So I think if we talk about consent, right? I think consent is essentially a tool to ensure that the consumer rights are protected, right? And in Malaysia, right, there are essentially two acts or two laws that govern data, right? Number one, we have the Personal Data Protection Act, which I understand in Indonesia as well, right? Whereby this act essentially regulates how data users administer, right, and manage the data that they obtain of their customers. So this would include the banks, the telcos, insurance, for example. They are all regulated under the PDP Act, right? Whereas for private credit reporting agencies, we are regulated by what I call a sister act, right? Which is the Credit Reporting Agencies Act. And within the Credit Reporting Agencies Act as well, number one of the key things to note is that the private credit reporting agencies are exempted from the PDP Act, right? So essentially, when collection of data coming from the telcos, so on and so forth, right, it is managed on this industry's perspective, right? Where the Credit Reporting Agencies Act prescribes for the CRA is that before a report can be disclosed with information on that data subject, explicit consent needs to be obtained, right? Now, I think there are a lot of discussions at a very early stage of, the Act being enacted and the interpretation of consent requirements, right? There was one school of thought during those days, if I recall, that, that requires the credit reporting agency themselves to obtain explicit consent from the consumers directly, right? However, I think, after numerous discussions and engagement, right, I think it's very clear that for the private credit bureaus to actually obtain consent directly from consumers, right, it is not viable, right? Because there is no exchange of benefits between the consumers and the Credit Reporting Agencies Act, right? And hence, how it works today is that the consent is actually obtained through the subscribers of the private credit reporting agency. So for example, the consent is obtained by the bank for CRAs to actually share information with the bank on the data subject, right? Because for the banks to actually obtain consent, it's definitely much easier, right? Because there is an exchange of benefit, right, between the consumers and the bank. The consumers want to get their loans approved, right? So that essentially is something that has been working over the last maybe 8 years, right? And the process is already in place, right, in terms of the consent mechanism, so on and so forth. I hope I answered your question.
Yes, and perhaps maybe touch very quickly on the data security aspect. How does that get imposed on the private credit bureaus?
I think from CITO's perspective, right, I think CITOS today, when we talk about our cyber security posture, I think over the last 9 years or so, once the Act came into force, we have made really, really huge investment, right, to strengthen our IT and data security, right? Today, I would say that CITOS and perhaps some of the other private credit reporting agencies are like a mini bank, right, in terms of its security and security and IT infrastructure, right? We talk about firewalls. We talk about what we call SOC, right? Security Operations Center, right? We talk about having the numerous filters and tools, right? So today, I think to put it into perspective, right, we are required to actually meet Bank Negara's risk management in technology guidelines and standards as well, right? And I think it makes sense, right? Because CITOS, we are custodian. We are one of the largest custodian of Malaysians' data, right? And we need to ensure that we administer this data with care, right? And these investments will ensure that we continue to be a trusted party, right, among the stakeholders of ours.
Got it. Thanks, Eric. So while you have the mic, I know we are running out of time, but maybe one quick last question to Eric is, given the transformation of CITOS that has accelerated in the past 7-8 years, how important are some of these factors? Right? Number one, a supportive regulatory environment. Number two, the injection of foreign capital, knowledge, technology, and so forth from the outside. And number three, so a level playing field environment where CITOS can compete on fair, equal ground with the other credit bureaus in the market.
I think the short and simple answer is yes to all, right? To all the points that you brought up. But I guess look at it this way, right? CITOS, we are a Malaysian homegrown private credit reporting agency, right? And I think one of the key things is that in order for us to develop, right, and transform ourselves, we look at what's there out there in the world, right? What's happening with the international credit bureaus, for example, right? What are the solutions that are required? So to a certain extent, sometimes I think we say that, why don't we just copy shamelessly, right? Why do you want to reinvent the wheel if you know that such solutions are already working in other jurisdictions, other markets, right? And in order to do that, definitely we need insights, right? From foreign investments, foreign knowledge, right? As well as, of course, their money as well, right? And I think that's important. That's the first step, right? Second thing, for a private credit reporting agency ecosystem, right, to play an important part as the overarching financial industry, right? Of course, there is a need to ensure of supportive and conducive regulatory framework, right? And I think in Malaysia, we are fortunate, right, that both our regulators, be it Bank Negara Malaysia as well as our Ministry of Finance, understands the importance of this industry and has continued to support the development of this industry.
Thanks,
Excuse me,
Eric.
gentlemen. Unfortunately, the time is up.
Great. So thank you so much again to my panelists, Mr. To and Eric. Really appreciate your presence here today and sharing your experience with the wider audience. Thank you.
Thank you very much for all the moderator and speakers. Yeah, we kindly request you to stay on stage to take a group photo. And then please take your token of appreciation. Okay, group photo first. Okay. On 3, 2, 1. One more time. Okay. On 3, 2, 1. Please give a round of applause, ladies and gentlemen, for all the moderator and speakers in this session. And for Mr. Eric Chin, maybe you can just stay on stage as I will introduce you as the moderator of the next session. Ladies and gentlemen, coming up to the next session discussion, it's a case study, adoption of credit bureau services by financial institutions and its impact on financial access to consumers and SMEs. This session will be moderated by CEO of CITOS Data Systems, Mr. Eric Chin. Yeah, Eric has over 15 years of strategic business and operational management experience in the credit reporting industry. At Citos, he is a part of the leadership team that transformed Citos from a credit report provider to a publicly listed one-stop credit management provider with solutions offering across the entire life cycle, from digital onboarding to credit assessment, to portfolio and asset quality management. Prior to Citos, he was a CEO of Credit Bureau Malaysia, where he established the market's first SME-focused credit bureau in 2008. He also has deep insights into the banking industry, where he spent 15 years on technology consulting and business process improvements for MNCs. Eric holds a bachelor's degree in economics from University Kebangsaan Malaysia, or UKM. Ladies and gentlemen, please welcome back to the stage, Mr. Eric Chin.
I think I will need to move this aside. So very good afternoon, ladies and gentlemen. First and foremost, thank you very much for having us here today, right? I would like to check whether my two esteemed speakers has managed to dial in all the way from Kuala Lumpur. I see Mr. Balan is already in. Hi Balan, how are you?
Hi, good afternoon. Good. Happy to be here.
Right.
Selamat siang.
Right. And Paili, are you in as well? Hi Balan. We're still waiting for Paili.
Kita masih menunggu.
Yeah, sure. I'll hold on.
All right, thank you. Okay. While waiting for Paili, maybe perhaps I would like to actually introduce Mr. Balan, right? Mr. Balan is the head of SME banking from CIMB Bank, Malaysia, right? And he has been holding this position since October 2018. Prior to that, he was also the head of business development with another local bank, which incidentally is also one of the largest banks in Malaysia, right? He has a total of 34 years of experience in banking, from operations, sales, account management, credit, and transformation in SME banking. He has a bachelor's degree in economics and a master's in management, and is also a certified credit professional, right? So today, Balan is spearheading transformation of SMEs, which is one of the key segments in Malaysia and is the backbone of economy, right? So, Balan, perhaps maybe you would like to start off with your presentation. Can we pull Mr. Balan's presentation up?
Yeah, thanks, Eric. Very good afternoon, distinguished guests and my fellow colleagues from the industry. I think I'll spare a couple of minutes in sharing some of the things where we have done over the last couple of years. In fact, the transformation in Malaysia for SME started about 10 to 12 years back, where a lot more focus was given to the SMEs in the country. If I will recall, in 15, 20 years ago, probably a few banks would want to do SME, right? Because it's just so difficult to underwrite, so difficult to write the papers. And at one point of time, I know that the NPL for SMEs was almost double digit, right? But today, as the previous speakers have mentioned, the NPL has gone down to single digit, largely through the transformation of the credit bureau, central credit reference and information system from the central bank. Also by the role played by the private credit bureaus like CITOS and other CRS in the country. And that has actually given a lot of transparency, accountability on the SMEs. This is why we see that the NPL for the industry has dropped from double digit to a very low single digit. Now, my point is only in terms of how we could do this better in terms of data-driven financing evaluation. Now, this fundamentally address the issue of cost to serve. Now, one of the reasons why in the past banks shy away from doing SME is because the cost to serve, right? And most of the banks will run this on a portfolio basis, right? And it's very difficult to assign an RM for this portfolio, right? So if you don't assign an RM, how would you then run SME books, particularly where large portion of the country and in fact globally the SMEs are really small, right? So that's the reason why the underwriting, the operations, the analytics for SME has to be data driven. And I'll share you where we actually get the data and how the role of the credit bureau and the credit rating agency in place. If you can move to the next slide. So you will see in the next slide, we as a bank, SME banking will be part of a commercial banking, right? You can see on the left-hand side of the slide, the commercial banking, and we are part of commercial banking. And I mean, of course, different banks adopt slightly different model, but generally, this will be part of commercial banking. And there are many other pillars of the business. I don't want to delve too much into this. But the key need or what we need to address for the market is in terms of digitizing the lending platform or lending process for the SMEs, and that enabling it as much as possible straight through. And if you go by the retail SME definition, which is below euro 1 million or US maybe less than 1 million, then I think the amount or the underwriting of this has to be done straight through as much as possible, right? If you go to the next slide, and you can see the reason why we need to do this, right? If 98.5% of the country, particularly in Malaysia, right, and I believe the statistics will not differ very much in many countries, is between 96 or 95 to 99% of the countries are actually SME. And in our example, the 77% of this 98% are actually micro SMEs, right? So if you want to serve the market and we don't digitize or you don't use the credit bureau and information that can be aggregated by the credit bureau, then our effort will not be successful, right? And the reason why we need to do this because they form almost 2/3 of the employment in the country and almost 1/3 of the GDP of the country. So that's crucial for us to address that. So if you go to the next slide. And you can see the challenges of SMEs, right? And all these are data, right? They have high cost of doing business, often the sentiment in the economy, the cash flow management, concentration, export constraints, and the disruption and the cost of labor. But ironically, this, if you look at the data, is 2018. And 2023, when we look at the reasons and challenges faced by the SME, is probably the same. We probably will look at the same 6 reasons of problem statement by the SMEs, right? And over the years, I think if this data is ample and is available, then I believe there's a way for us to aggregate this data and underwrite the business better. And if I were to just point out one of the key changes that happened in the last 3 years post-COVID or during COVID is the digital disruption. Now, today, I would say in Malaysia, almost 75% of the SME have a digital sales platform, right? And they are able to at least sell, and this has proven to be the key survival reason why many of the SMEs in the country survive during post-COVID, right? And because they are able to digitize the front end. So the challenge to get them to believe in digitization or data-driven, even for sales as well as underwriting, I don't think the apprehension to the approach today is significant as compared to what we had pre-COVID. I think what the COVID has done more good for the SME than before that, right? So in terms of the data that we have, if you go to the next slide, I can share that, financial record used to be one of the biggest problem, right? But I think we are learning to move away from the financial record. Today is still a big challenge. And we are learning to, because there are a lot of alternative data in terms of transaction volume, transaction value, that can substitute this information for us to make the decision. In terms of owners management, and just now I think the previous speaker talked about how the central credit reference information in Malaysia has enabled the accountability and transparency to improve since the day the Central Credit Bureau was implemented in Malaysia. I remember it's post-97. I was an RM before 97, and you do not know how much facility customer have with another bank. It based on the declaration. But post 97, after the CCRIS was introduced, you find that they're very transparent, and therefore that enhances the accountability and integrity of the client. And that's the reason why the NPL dropped from double digit to low single digit, right? And because the ability of the CRA and the Credit Bureau to aggregate the data, on the third issue of incomplete document, I recall at one point of time, maybe even 5 years ago, the SME need to probably consolidate about 2 to 3 inches thick of documents. Now today, this is hardly necessary because all this information about audited financial statement, last 6 months statement are data source that is available within the bank, and some of it can be aggregated by your credit bureau. So hence, the role of credit bureau whether it's private or the central bank and the bank in harnessing the data has been crucial in improving the way we underwrite the SME. So again, if you go to the move to the next slide, the added benefit of this collaboration, we have less issues of getting financial statement. We have less issues of understanding the owners of the business because of the availability of this data through the credit bureaus like CITOS and the other CRAs, and also the credit rating agencies like CITOS help us to aggregate the data that's available in the market there. And if the customers, I think Eric has addressed the issue of consent just now. Once they consent, I think the benefit to the SMEs is that today we ask very minimal documentation, and if at least the banks they are banking with the particular bank, probably the only thing they need to give is the latest financial statement or management account. The rest of the document are fully digitized in the country. So on top of that, if you go to the next slide, just to give a flavor in terms of how we do, sorry, one slide before that, yeah, how we use the data. And it's a B2B with the CRA, and there are scores. And today, CITOS also does the service to customers by giving them a preview of their own credit rating. Probably a customer will be much more comfortable to go to a credit rating agency than to a central bank or to the bank. You might find that surprised, but a lot of customers find it challenging to approach the bank. So for them to own up, to improve their credit standing, is good for them to probably engage the credit rating agency to understand their score. And this is where we work closely with CITOS in terms of educating the market, in advising customer how they can improve their own credit score by teaching them what are things they need to do, what are the steps they need to take in order to improve their credit score. So internally, we also use the portfolio scrub. In fact, during pandemic, we use this extensively to identify those clients who may have challenges during the COVID, and we are able to accurately, almost to 80%, identify clients that had, this is one of the use cases that we shared with our clients in Malaysia, and this helped us to identify the customers correctly and enable us to help. And I was happy to say that even at one point in time, we had 90% of the customers under moratorium. Post-pandemic, you can see the NPL is low single digit, and almost 95% of them are out of all kind of programs that was deployed during the moratorium. So that, I think, was the success and benefit of having a comprehensive credit bureau, as well as the credit reporting system and the collaboration between the banks and the private credit bureaus. Eric, I'll stop here and take questions later. Thanks.
Thanks, Balan. Thanks for sharing insights on how CIMB, especially for the SME financing, has essentially leveraged on services from private credit bureaus in supporting your objectives. So to continue with the experience sharing, I'm also very pleased to have with me Ms. Gan Pai Lee, the Group Chief Consumer Banking Officer for Alliance Bank. As an introduction, Ms. Gan is driving the next phase of growth for consumer banking business, not only in Alliance Bank, but at the same time, right, she's shaking the industry over in Malaysia, right? She has over 25 years of experience in retail, wholesale banking, private wealth, private equity, as well as mergers and acquisition. At Alliance Bank, I think some of her pioneering initiatives include the launch of eKYC capabilities to efficiently onboard customers digitally. And at the same time, she has also just launched the first virtual credit card in Malaysia. Prior to joining Alliance Bank, Ms. Gan was the Group Chief Strategy and Transformation Officer of RHB Bank, whereby she was very key in terms of advising the management team in terms of formulating the organization's strategic plans and execution of key initiatives. So, hi Pai Lee, how are you? Right, so over to you, Pai Lee. She will be sharing a paper on gaining competitive advantage through adoption of digital solutions for consumer lending. Over to you, Pai Lee.
Hi, Eric. Thank you. Thanks, everyone. I'll just jump straight into the presentation. So Alliance Bank, as an overview, we are a very small bank. We've got a branch presence of about maybe only 80 branches, thereabouts. So to make up for that sort of small branch network, we've been heavily investing into digital. Perhaps you could go to the first slide. On the screen is still the title page. Yeah, thank you. So what we've done really is to then divert resources into the digital space. And as rightly, as Balan has put it, right, the MCO certainly did give a big push on the Malaysian market. You see a lot more people becoming digitally savvy simply because they are forced to do so. And we saw that space as an area that we could occupy. And of course, working with CITOS, we came up with the first eKYC launch. We were the first to move. Following that, I think in the space of about 6 months, several other banks also launched eKYC. So I think that's the trend that we want to set. We'd like to be first mover. And then, of course, after that, we continue to fine tune our programs. Now, the way we do our sort of segment hunting in Alliance Bank, given our small branch base, is very much to go on mobile. Very pleased to also share with the audience here that we were able to get a few awards. I think these awards are testament to our commitment to being active in the mobile and digital space. So I'll just move on to the next slide. In this next slide, I just wanted to share some of the things that we have had to face in the consumer space in Malaysia. In Malaysia, right, there are about 9 big banks. Out of that, about the 4 top banks take about 50 to 60% of the consumer banking market. So you're really fighting in a space that's very competitive. For us at Alliance, what we saw in the past was really a very cumbersome application process. And today we're trying to move all of that onto the digital mobile. Now, ways, of course, to improve our application to disbursement time, this is really where we compete in terms of turnaround time. And lastly, of course, the credit decisioning. So this is again an area of space that we worked very heavily with CITOS on improving our scores. What we're trying to achieve really is to get that propensity right in terms of selecting the right customer targets. So as we go along, we find that there are opportunities for us to even break that down to region basis. For example, you would hunt for customers in the northern region versus, let's say, Sabah Sarawak, quite differently, given the different standards of living, given the different standards of behaviorals as well, okay, in terms of income. So income approximation has become quite a big area for us, and that's really an area that we're trying to work more with CITOS on. I think for consumer banks, I'm not so sure about how it's done in Indonesia, but here, the segmenting becomes a very important area to focus on. The more you improve your score with layering of further types of data, for example, telco data, behavioral data and subscription models, you're able to tell a lot more about the segment that you're actually trying to bank. And I think that's the key focus going forward. So the other area for us, of course, were the challenges in terms of our branch footprint. As I said, the digital distribution is a very important aspect of our business. And of course, the need to innovate in order to remain competitive. And what we've seen so far is we've been able to keep our turnaround times up. We're in fact moving towards straight-through processing. And again, that is very much score dependent. Hence, the refinement of scores will always be a key area for us. And that's where we also then have to look into the areas of fraud. We continue to use ID Guard, and I'd like to share a little bit about how that has actually elevated some of our fraud security detection. Okay, so I'll move to the next slide. Okay, CITOS alone, of course, will not be able to give us everything. So it's a way in which we incorporate the data we get from CITOS into our scoring methodology, and then also the credit bureau as well as the Bank Negara data. So very much all this is in-house. And I think that's where the teams have to learn in terms of how we segment customers. So in here, I'd just like to share very quickly, right? There are 3 parts that we look at in the consumer business. One, of course, is the onboarding. This is where you bring in your acquisitions. And hence, time is very important. Hence, the eKYC really cut that down for us. We saw a 20% improvement also in terms of fraud and avoidance once we implemented the ID Guard Fraud Bureau scores. So again, the refinement of scores is very key to our business for acquisitions. Then, of course, the credit assessment. Here's where we spend a lot of time looking at the credit curves, looking at the modeling, looking at assumptions on the ECL provisions. And again, the CITOS score, the ID Guard fraud, all that data points help us build that sort of provisioning model. And lastly, of course, the portfolio management. As you know, we require a lot of offers data to actually build our scores. And again, that's where we dig deep into the CITOS data scores. We try and refine that by building out our simulation models. Now, the other thing that we do quite a lot of is actually portfolio scrubs. This essentially goes back to our origination policies. As you scrub your portfolio, you then start to rebuild and relook your origination policies. So it's a look back, right? You onboard your customer through acquisition, you refine the credit assessment, and then you look at your portfolio behaviors. Based on the portfolio behaviors, we go back and revisit your origination. So that's how the business is run in consumer. And I think over time, right, this is probably going to be something that all banks will start to do. And it's a matter of how fast you can do it, how accurate your scores are. So that's really where the consumer play will be for the Malaysian market. Okay. And then I'll go to the last slide. So in my last slide, I just wanted to show that in terms of 3 areas that we are KPI'd on, one, of course, is the customer experience. So we spend a lot of money on digital. We need to show an ROI for it. And basically, we measure that via the end-to-end. So the eKYC actually helped boost that a lot for us. It today only takes 15 minutes for an application to come through. And the traffic volume through eKYC has definitely increased more than twofolds year on year. So we do see that it's also an adoption rate that's picking up in Malaysia. The Malaysian consumer is actually quite interested in being digitally savvy. Hence, it justifies why we want to spend more money on the mobile space and continue to build some of these capabilities that can give you the straight through. So our intent really is to be able to push through every single product on a straight through process on a single day. That's really on our wish list. Okay. Then of course the backing this will be the credit decisioning. Again, back to fine tuning. This is really where the nitty-gritty work is done. And as I said earlier on, the score enrichment for customer targeting is going to be pretty important. And then of course, finally, the predictive scoring that helps us build both origination and collection strategies. And then finally, of course, it comes down to loans growth. If we do all this well, our propensity models work well, we're able to then push for our loans growth. Loans growth in the Malaysian market stands at around 9.3% in the area of personal financing. It's a very big space in the consumer lending bit. Yeah. So overall, in consumer lending, you have secured loans, unsecured loans. As a total, I think about loans growth for the banking space has been about 4 to 5%. But what's important to note is that the consumption for unsecured personal lending has been jumping up, and it grows at about 9.3% for the Malaysian banking sector. So those are the sort of loans growth targets that we're angling towards. And we think that if we continue to invest in the decisioning through the refinement of scores, you probably get more money out of your, or rather more bang out of your buck if you continue to invest in the digital space. Okay. And then of course, lastly, more and more so, we find our digital channels having to go through upgrades simply because we're beginning to get more and more of our loan growth through the digital channels. Today, we're standing at around 30 to 40%. Yeah, I think, Eric, that's all I have in my presentation today. Happy to take questions.
Thanks, Paili. So, ladies and gentlemen, I believe you have heard from two senior bankers on how the banks have managed to leverage on private credit bureau services, right, to obtain value in terms of their business, both the SMEs as well as the consumer, right, in terms of, you know, increasing approval rates, accelerating turnaround time to process applications, and even, you know, reducing default rates. So at this juncture, perhaps I would like to open the floor if there are any questions to our speakers here today. Could I open the floor to any of you for any questions? So, Balan and Paili, I think one of the questions that have came up is whether your bank still leverage on Bank Negara secrets, or you already, or at this juncture, you are currently leveraging more on private credit reporting agencies, and the reason for it.
Okay, I think for new application that comes on board, it will be direct to the secrets of the Bank Negara. But for portfolio management, you can always use the credit bureau for purpose of portfolio management, either to manage the risk of the portfolio or to identify potentials or any other action that you want to take on the portfolio, that you can use the private credit bureau. But new applications, of course, new applications, you can't use the credit bureau because you have not obtained the consent yet, right? So the first application, once you obtain the consent, normally all our lending origination system will go direct to the Central Credit Reference Information System to extract the data, right? And that is up to the individual banks whether you want to build it direct to B2B or direct to the central bank. In most cases, direct to the central bank.
What about in the case of Alliance Bank?
Yeah, so similar experience for us. We take the pool, the first secrets pool from Bank Negara, and then after that we impose our overlays. Now, those overlays are, of course, a mixture of what we get from the CTOS scores as well. So the behavioral models that we build are actually a combination of both.
Kevin, does that answer your question? Right, secrets is still the base information, but the overlays come from private credit bureaus in terms of credit scoring, additional credit insights, and advanced analytics to help them in terms of onboarding as well as portfolio management. I believe there's a question from the gentleman over there.
Thank you for opportunity to ask question, Mr. Chin. To Mrs. Ali, you mentioned about the uses of predictive score in order to develop the risk-based pricings. Are you using this policy for the current customer or the not yet the customers of your banks? And also you mentioned about that you are using more in internal data instead of credit bureau data, is that right? And because sometimes we have to use like score based on population data that deliver from credit bureau, and sometimes it could be difference between data that you are internally collected compared to the credit bureau that have the population data. And the first question is how you implement the risk-based pricing. Are you giving the less interest rate to the good, the best that the consumer they have a good score, or what kind of implementation? And for the first presentation, the success of SME sometimes is not only by giving money, it's a complete, package from training and incubations and is it part of the success? Is there any policy that can guarantee that the SME will be success in manage the loan that they have already from the banks? Thank you.
Perhaps over to you, Paili, first.
Sure. Okay, I think I hear three parts in that question, right? Firstly, all our scores look at existing to base and new to base. So we would split the sort of policies we would run for existing to base because we've had the benefit of looking at how the portfolio behaves. Okay, so let's say I've had a customer who has done repeated pools for me on personal financing. These are unsecured loans, and the person has performed. So I study back, see what sort of segment this customer comes from. What I then do based on the policy for existing to base is that I would replicate a set of origination criteria for new to bank. And then I'll tell the sales team, okay, this is the sort of profile we're looking for, right? So that's how the two of them interloop. And as you do this, you will find that that's always a loop cycle that you have to keep on revisiting. And we try and do this in gaps, maybe 3 months, 6 months. We do use a lot of the Bank Negara data pools, as well as CTOS scoring to do overlays. And that's how really the origination policies, I think, should work. There must be a feedback loop. Then we move on to your other question. You asked me whether it was more of internal data or more of population data, and there being differences in the gap. Honestly, that is always the one area that we need to sit down and crack together with credit and risk. There will be gaps in your population data. There will be gaps in your internal data. So you again need to figure out what sort of segment you want. Maybe for Malaysia, or a smaller country, it's easier to segmentize. But as we said, the behavioral traits of your customers will tell you how much of dependence you will have to rely on the secrets pool and how much of dependence you will need to rely on the overlays that you pull in. So one of the areas that I think I wanted to just speak a little bit about is that we're actually very interested to see if CTOS can pull together data that is not financially backed. i.e. subscription models, the way you handle your telco payments, the way you handle your spend patterns, whether those kind of overlays can then be imputed into our existing to base and then looped over to origination criteria. So that's one area that I think is pretty exciting for the Malaysian market, if credit bureaus are able to help banks build that sort of business acumen models. Okay, so again, I don't have an answer as to how we handle the difference in gapping, but a lot of it has got to do with sometimes you take a test cell out, you try out maybe on just a number of customers, see how it performs, and then you keep on refining your test cell before you incorporate it into your original policies. That's one way that I think a bank, should operate in the consumer space. Then your last question was about risk-based pricing. Honestly, risk-based pricing is a lot about trial and error. We again try and draw out a profile of customers we want. We test them. We give them maybe some carrots to come in and try the product. Because if the customer doesn't take the product, you never get a chance to really try out some of the behavioral traits. So in a way, we have to seed certain segments of customers in order for us to have a base to build out on. I think those are the three parts of your questions. I hope I've answered them. Okay.
Thank you, Paili. Perhaps Balan, I think there was also a question on the SME side of it.
Yeah, so I think the issue we try to address in my slide just now is largely in terms of bringing the complexity of financing lower so that the smaller SMEs are able to access to the finance, right? So we have gone through a lot of that transformation over the years, and we have made access to finance less complicated than the past. Okay. Now, to the second part of it, do you do anything more than that? Because today, the ability to access to the finance is still a big challenge. So that annually we run close to 500 to 600 programs for the market, focusing on capacity and capability building, right? So some of the events we also have done with the credit bureau, where you invite the credit bureau customers for them to understand how they are rated, how are they scored. This is a big thing that many of the SMEs don't understand. They don't understand how they are being rated, why they fail the rating. We need to teach them what it takes for you to have a good rating. You can't just come back one morning and say, I want to apply for a loan. It doesn't work like that. So a lot of capability and capacity building program goes out to the market. And of course, that's a dedicated team with me that runs the program for the entire country. And we go out throughout the country. We work with the credit bureaus, we work with the government agencies, we work with the state corporation, we work with the business chambers in the local area to deliver this program. So some are customized, some are bespoke. We go by industry. Say, for example, for retail, these are the announcements in the budget, these are the funds that are available, these are the support that's given by the Bank Negara. How do you access, how do you qualify for this? So a lot of training programs are done for the market. So I think, yes, I fully agree with you. It's not just about financing. There's a big part of work, which is, I don't cover that in the presentation, but I tell you that's absolutely necessary for you to do this hand in hand together.
Thank you. Right. So I think we have pretty much run out of time, right? Any final thoughts from Balan or Paili?
Quick thoughts. I think the transformation last 10 years has been good. Last 3 years has been even faster. I think next 5 years will be super fast, right? I think, as mentioned, change is only thing constant, and I think the market is developing very fast, and the SMEs are progressing very well, and they are digitizing. So we look forward to a much more progressive SMEs, and I think we have brought down the NPL to very, very low single digit. I think there's a lot of opportunity growth, still about 40% of the SMEs, which we need to train and get them to be able to access to finance. I think that's the objective we need to move forward.
Maybe I'll just hinge on that a little bit, right? The SME segments in Malaysia are actually very conducive also because of the support that they get from the central bank. Throughout the whole of MCO, I think the focus on making sure that the SMEs survive, do well, and prosper have been a very key area. Okay. Now, we don't necessarily see that on the consumer side of the business. That's more individual. But the financial literacy levels for the consumer segment are equally important. So when you run things like the CITOS score programs, that really is a way to get more individuals acquainted with their own credit profiling. We have in Malaysia today still many people with thin file. Thin file meaning that you've never taken a loan in your life, maybe you never needed to, but because of that, right, when you come in with an application to a bank, chances are you will be turned away. And as the newer and younger people join the workforce, I actually think that's a piece of work that both banks, of course the central bank backs this, and credit bureaus need to focus on. We need to encourage people to take simple products, credit cards, even personal loans if they want to, or hire purchase. These sort of products actually help you build your credit footprint. And that credit footprint gets fed back into the secret pools. So eventually, as you move through your entire life cycle, it's easier for you to have access to credit. So I think that's one area that we probably need to pay a bit more focus on. And again, maybe that's through the digital space, and I'm not so sure, right? But we need to make this financial literacy item easy and accessible to people. So I think that's where the Malaysian banking community needs to maybe focus a little bit more on the education bit. Yeah.
Thank you for the final thoughts. And of course, on behalf of CITOS, we will definitely be there engaging with both CIMB and Alliance Bank and understand how we can work together to bring forward some of these aspirations. And one final word, Balan and Paili, please come to Bali. It's beautiful now, this time of the year. Thank you.
Thank you.
Thank you.
Thank you very much, Mr. Chin, Miss Paili, and Mr. Balan. We kindly request you to stay. Open up your camera, and Mr. Chin, maybe you can stand on the middle of the stage as we're going to have like a hybrid group photo. It's technology, ladies and gentlemen. Okay, on 3, 2, 1. One more time. 3, 2, 1. Okay. Thank you very much, Mr. Chin, Miss Paili, and Mr. Balan. Give a round of applause, ladies and gentlemen, for all the speaker and moderator in this session. All right, ladies and gentlemen, we have come to the break session. I know you're waiting for this because it's lunchtime. We will have the lunch at the hotel's restaurant, namely Green Restaurant. But before we enjoy the lunch, let me remind you that we still have another fruitful seminar, as well as an FGD and working group of innovative credit scoring for the rest of the day. So please don't go anywhere. And we will see you again in the next 60 minutes after lunch break. Salam kebajikan, Om Santi Santi Om. Wassalamualaikum warahmatullahi wabarakatuh. Ya, Bapak Ibu yang kami hormati, untuk makan siang disediakan di restoran hotel di bawah lobi. Untuk nama restorannya Restoran Green. Terima kasih dan sampai jumpa kembali 60 menit lagi setelah break makan siang. Terima kasih. Bapak Ibu yang kami hormati, sesaat lagi kita akan memulai sesi kedua setelah makan siang untuk kegiatan International Seminar on Promoting Digital Finance Inclusion for Consumers and MSMEs through the use of credit scoring. Ladies and gentlemen, shortly we will begin the second session after lunch of the seminar. So, yeah, we encourage you and your colleagues to come back to the venue and please be seated. Sekali lagi Bapak Ibu, kami mohon perkenan Bapak Ibu sekalian dan rekan-rekan semuanya untuk kembali ke dalam venue kegiatan dan segera menempati tempat duduk karena sesaat lagi kegiatan seminar sesi kedua setelah makan siang akan segera kita mulai kembali. Terima kasih Bapak Ibu. Ladies and gentlemen, we will shortly begin the second session of the seminar. Please be seated. Once again, ladies and gentlemen, we will shortly begin the second session of the seminar. Please be seated. Thank you. Good afternoon, distinguished ladies and gentlemen, and welcome back to the next session of seminar. And without further ado, we will have a panel discussion with the topic of alternative data and credit scoring in the role and synergy in financial inclusion, as well as its regulation in other countries. This session will be moderated by Commercial Director Pevindo Biro Credit ID Score, Bapak Wahyu Trenggono. Bapak Wahyu Trenggono, ladies and gentlemen, has a strong background in the Indonesian financial industry with 26 years experiences in various roles across different organizations. He has played an active role in the development of the financial market in Indonesia, both from the regulatory perspective and market player perspective that enable him to better serve the financial industry as a whole. He also served as a project coordinator for the Bond Electronic Trading Platform, Bond Market Development Team, which was a joint initiative among OJK, Bank Indonesia, and the Ministry of Finance of the Republic of Indonesia since 2016 to 2018. Without further ado, please welcome Bapak Wahyu Trenggono.
Oke, Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu. Distinguished ladies and gentlemen, from this morning we have listened to the discourse between the private credit registry and the private credit bureau. And then when we see the title here, you can see it's not only public registry and also private credit bureau, but also the ICS, Innovative Credit Rating, Credit Scoring, okay? But where is this discussion of the ICS? Now we are talking, okay? I would like to borrow, from this morning panelist, Vicenzo. He mentioned about them. Is it a myth? Is it a myth? PCB and PCR competing? Is it a myth? PCB and PCR, private credit bureau, private credit registry, are the same? Now I want to borrow that. I want to ask the same question. Is it a myth that ICS and private credit bureau is the same? And also, is it a myth if the private credit bureau and ICS, Innovative Credit Scoring, is competing? Okay? That's what we will discuss in this panel. That's why I would like to invite the honorable panelists. First will be Mr. Sung Yun Chun, from Credit Bureau, Korea Credit Bureau. Mr. Sung Yun Chun is a director of Global Credit Bureau Business, and then he has the 20 years experiences in the area of credit bureau, including credit scoring, credit bureau products and analytics, including alternative credit scoring. So it will be interesting to hear from Mr. Sung Yun Chun about from the private credit bureau point of view. And then the second speaker, second panelist will be Mr. Muhammad Fawladi He is the regional head of customer value proposition, yeah, from Advanced AI. Please. Mohammed Fuladi is the regional head of customer value proposition at the Advanced.ai and has over 19 years of experience in the development of implementation and solution in areas cybersecurity, identity proofing, and fraud prevention. Mr. Mohammed Fuladi here will provide the point of view from the ICS in this panel. And then, last but not least, I think I don't have to introduce because he has been introduced this morning, yeah? Mr. Ivailo Kolev, yeah, or we can call him Ivo. He is the Group Chief Data and Product Officer from Citos, okay? Ivo has 19 years of experience in the financial service, analytics, and credit reporting industries, okay? Okay, so according to our topics, I will provide you, each one of you, for 10 minutes presentation. Yeah, it will be started by Mr. Sung Jun Chun, please.
Thank you for a great chance to be here, and personally, it's honor to present about credit bureau and alternative credit bureau in this meaningful place. Actually, personally, Bali is very meaningful place because back in 2010, I remember I had a workshop with the Indonesian government, and then the topic regarding about the credit bureau and how they set up the public credit registry in the national wise. So I remember some of the audience will also join that conference, and after 13 years, I come back Bali again and have another session for alternative credit scoring this time. So, so I'm watching the enhancement and progress of the Indonesian country, and then I'm really happy to have a session for this meaningful event for OJK. So next, please. So today, my presentation topic is about the financial innovation and financial inclusion by alternative credit scoring in Korea. So let me briefly introduce Korea Credit Bureau. We are headquartered in Seoul, and we provide credit bureau services also with alternative scoring services together with more than 60 different products. And as I said, since 2010, I have visited Jakarta pretty a lot, and I also joined the OJK's SLEEK project as a technical partner in 2015, and actually I know very well of the people from the Credit Bureau and OJK. And next, please. So today I'd like to introduce why we have a financial inclusion issue even in Korea, because as you may know, Korea is one of the heavy credit society, because like me, I have more than 10 credit cards, and usually people has a lot of credit, and then maybe as a foreigner in Indonesia, you think that Korea has no problem for the credit inclusion or financial inclusion problem. Actually, no. We have a problem because like normal people, they have a lot of credit history and credit facilitation, but like some old gentlemen and ladies and young generation after graduation, they don't have any facility or credit history enough. So to support them, our regulator had a concern how they include these kind of people to have a financial access to them. That is one of the motivation from our regulator. And secondly, from the industry itself, with the high competition in the credit market, financial institutions want to have a small or much more segment for the people. So, but by having alternative data, they have a chance to decrease credit risk and increase the market chance. That is one of the motivation from the industry. And finally, from the data source wise, I think all of the countries the same. We are in the middle of the era of the data transformation, data big bang. So due to the digital transformation from not only from the financial industry, but also other industry, there's a lot of data is generating and coming. So after they accumulating this kind of data, they open eyes. Okay, we can make some money by using this data. So who is the person can sell this data? So they tend to looking for some legal entity which can buy their data. That is the alternative data's source motivation. And next, please. And with this environment, as a credit bureau, not only for the credit information, but also we actively use the alternative data or alternative scoring for financial institutions. So I try to focus on some major event or product and services. So first time I remember, like the 2017, we started telco service having a business partnership with a telco company. But last year, we have a limitation because we try to have a more in-depth telco data, but that is a limitation. So instead of the telco service, we changed the scheme and then setting up the joint venture with three is the all of the telco company in Korea. So we are working on the setting up the joint venture with the telco companies. So meaning that even though telco-wise, we try to collect more and more information and try to more value-added service by using the telco data. Because some of you are from the LPIP side, so one of the most important product is credit bureau score. So from the initial years, we try to collect public information from the government because as a regulator or government side, they want to support some financial inclusion problem to solve this kind of inclusion problem. So by having public information, we started developing the interactive public database, the bureau score, and then this, the score is like the standard score for in Korea. So after that, we expand our journey regarding the alternative data. So like, if you look at the alternative data in the Google, you can check the utility data. So for utility, we have a business alliance with the utility company by using the gas or electricity or some lantern information. We started to provide a utility score for financial institution. And also recently, not only those kind of the utility information, but also we have a business partnership with a mobility company. So by using the public transformation information, we provide the public mobility score. Also having some business partnership with the navigation company. By using navigation information, we provide the mobility score together. So actually, even in the Korea, the journey of the alternative scoring or alternative data is still evolving now. And then I don't think we are arrive at the final destination because even in the Korea, we are still every year from our internal, new business alliance is coming in and then new product is launched and then introduced to the financial institution. And this is very meaningful because that from the financial institution, they have a chance to enhance their risk management, but also from the public side, we can have a chance to support to increase the the possibility of the financial inclusion problems. So that is the ongoing story of the Korea right now. Next, please. So, actually the how I just has a concern. How can we describe our structure in Korea regarding the credit bureau and the alternative scoring player? So this is my concept for the current situation. So in the center, you can see the LPIP, credit bureau. So traditionally, credit bureau provide the value-added service for the credit risk management for the financial institution. And also, we try to actively make use of a lot of the public information from the government. Still, at the same time, our government is very open, try to make use of the data from the government internal, and then luckily we have many chance to use more data from the public side. So, but recently, we have many chances for the partnership or business alliances to meet the alternative data source, like a telco company or a utility company, mobility company, sometimes some book publishing company, solar, and then we have a business alliance to produce the alternative scoring for the...
Another 1 minute.
Okay, yeah. And, but in the same time, what is important is that we do not compete with the alternative scoring player. We have a synergy and who work together with the ICS. That is the situation in Korea. Last page. So before my presentation, I try to introduce what is the regulatory consideration. So in Korea, our regulator makes some legal background. So with the licensing scheme. So previously, there is only one single credit bureau license, but they make a separate, different license scheme. So as an individual credit bureau still have a traditional and alternative together for the business-wide, but they will introduce the alternative license scheme. And separately for the SME, they will introduce the individual business license scheme together with the My Data scheme license. Okay, that is the situation in Korea. And then thank you for listening.
Thank you, Mr. Sunjun. Next, if we have already the vision from the PCB, now we have from the ICS. Please, take your time.
Sure. Thank you. Can we have the slide, please? So I was thinking how to start the session, especially after such an amazing lunch with full of rice, and to make sure that everyone is awake. So I thought that I'll start with a story that's going to tell you about advanced AI.
Ingin mengikuti sesi ini ya.
Sorry?
No, I think.
Apologies. So I'll tell you a little bit about advanced AI. Advanced AI is a Singaporean startup, part of Advanced Intelligence Group. Now this story is very relevant to the topic that we are discussing today and tomorrow. How the company started is back in 2016. Our three co-founders, Chun, Jefferson Chen, and Dong. Dong is Advanced AI CEO. They were visiting Indonesia for potential business opportunities. And back in those days, Grab or Gojek didn't exist at that time, or it was just very small. So the norm was that any foreign traveler, when they would come to Indonesia, they would rent a car for the whole day or the whole time that they were here. So these three founders, they went for a meeting in the morning with their driver. When they came out of the meeting on a very hot Jakarta day, you could imagine, around lunchtime, the driver was missing. And these guys had another meeting to get to in the next hour or so for another lunch working meeting. And after a while, the driver showed up, and the driver was out of breath. And obviously, these guys missed the meeting. So they asked the driver, what happened? Where were you? We were waiting for you, and because of you, we now have missed the meeting. And the gentleman turned around, he said, look, my daughter, she's visiting from my hometown, she's unwell, I don't have money to take her to hospital. So the bank wouldn't give me money because I have nothing to put as a collateral with the bank. So I went to a loan shark, and what he borrowed was equivalent of only $150. Now that was very painful. That was with every missed opportunity, there comes a new opportunity. That's when the founders of Advanced AI, they realized that in Indonesia, you have a massive section of the population which is underbanked or unbanked. And what can we do as technology company to enable and reduce this gap? And hence Advanced AI came into picture. Next slide, please. This shows you the number of adults in different parts of the world, different continents, who doesn't have credit bureau coverage. I'm from Sydney, Australia. We have 99% credit bureau coverage. We are fortunate enough, but in Asia Pacific, over 78% of the adult population does not have access to credit bureau, which means they are not part of the mainstream society. And that is the challenge that we are trying to solve in this quorum, to see how can we bring these massive population as part of the financial ecosystem. Next slide. Again, these are the statistics from Asian Banker. Some may not agree with it, but roughly the numbers are very similar. 23% of adult population is bankable with a very good, rich history, so they're part of the mainstream financial system. But what's concerning is the second part, where you have a massive proportion, almost 2/3 of the population that is either unbanked or underbanked. And these are and this is the size of the opportunity that what we are trying to solve with ICS. Next slide. BNPL, Buy Now Pay Later. It took the world by storm. Buy Now Pay Later in Indonesia last year, it did around $5,000 million. 5,000 million, which is about $5 billion. It's expected that the Buy Now Pay Later Indonesia will reach very close to 25 to 27 billion in the next 3 years. Now, what resonated with Buy Now Pay Later, their prime target segment is youth. Adults over the age of 18 and under 50. That's where majority of their customer is based at. Now, how these Buy Now Pay Later companies became successful is by leveraging alternative data. That alternative data enabled them to make credit decisions or credit risk decisions in a more effective, efficient manner, which is in the form of unsecure. And hence the reason you have seen these Buy Now Pay Later companies evolving and thriving in the last 2 to 3 years. And of course, the underlying, what really set them apart is by leveraging AI machine learning models. And now almost every Buy Now Pay Later is using credit bureau services as well. They do report to SLIC. They get the credit bureau scores as well, which is enabling them to really venture into other financial services offering as well, such as some countries that have started offering credit cards or unsecured cash loans as well. Next slide. Indonesia, it's a blessing, right? Indonesia is very tech savvy. It is digital ready. I wouldn't say Indonesia is going towards digitalization, right? Or digitization. Indonesia is going through a digital revolution right now, which presents us with an opportunity, right? If you look at the telecom data, according to the World Bank, for every 100 Indonesian adult citizen, there is 130 cell phones, right? That shows that the nation is really embracing and adopting the technology that is in offer. So imagine us using that data, right, and being able to convert that number of population that we mentioned, right, around 25% being underbanked. That's the segment that we want to move towards banked. That's the massive opportunity. Then you have other data, social media, device data, email data, and so on and so forth. Now, this is the opportunity that ICS brings to the table along with the credit bureau, with the PCBs. We can create an ecosystem which is really going to promote that digital financial inclusion. Next slide. How advanced AI is helping. As it was presented, one of the panel discussions that Eric led, it was very resonating when I heard our Malaysian banks, how they're leveraging joint modelings, right? This is how advanced AI is helping financial institutions and non-financial institutions in Indonesia by bringing gamut of various data and being able to create models. And these models can serve different purposes. It could serve cross-selling, upselling. It could serve new segments that they are targeting, right? Next slide. This is a very busy slide. Now I'm going to leave this with you guys. It's food for thought. So typically when I go to a conference and I present, I always leave something for the audience to ponder on. Where the world is heading towards is, you can say, almost like consortium-based coalitions or JVs. What I mean by that is, in Brazil, one of the biggest credit bureaus is a JV by the top 5 banks. The top 5 banks are sharing positive data, bringing to a central location, leveraging AI machine learning, and being able to use that data to derive credit score. Very different, right? Now, why I'm mentioning the Brazil, now obviously Brazil hasn't really adopted that element of it, but where the industry is heading towards, the new buzzword is called privacy-enhanced computing, right? Data that belongs to organizations, leveraging the new and greatest and latest technology, you are able to get these consortium of organizations. So imagine all the top 5, 6 telcos in Indonesia coming together, right? Forming a JV, for example, obviously going to a regulator and getting approval as well, highly recommended, right? Then you're able to bring the data, anonymize the data, but through that homomorphic encryption, that's another new buzzword, right? The data integrity and the data relationship is not being lost. You can bring that in, and in that central location, you can now start doing modeling. Now, this is not a myth. This was tested last year in China. The biggest telecommunication company in China, right? I wouldn't say the name. You guys know which is the biggest telco. One of the top 5 banks in China. What they did is, this bank went to the telco, they created this privacy-enhanced sandboxing.
One more minute.
Sure. And what they did, they said, we are interested to find customers that overlap. The bank's customer with the telco customer. From that overlap, they identified that there is a segment of customers that we could potentially target to offer credit cards. Then they did some further analytics and machine learning modeling on that, and they identified, within a space of 1 month, they identified 20 million potential customers that they could target and offer credit card, which was within the risk appetite of that institution. So it's really happening. And a lot of OJK peers, I highly recommend you to have a look at this. There is a massive opportunity that we can bring in, for example, the regional banks. There are a large segment of population that is ignored, and we can take this approach and really promote digital financial inclusion. Thank you very much.
Thank you, Mohammed. Next. We hope for a balanced view, yeah, because of Ivo from the Credit Bureau and his previous experience, I think also including the alternative data score. Please.
Thank you. I'll share hopefully a balanced view, but it's a very personal view as well, because I've suffered through a couple of alternative data journeys, suffered in a positive way because I learned a lot firsthand. So if you could present my first slide, please. In my previous life at Experian, at some point I developed that fixation on solving the world's thin file problem. So Experian was and is the largest credit bureau operator globally, and when I looked at the world map and the people unbanked in some parts of the world, I thought, wow, we have bureaus there, so if we have a way to convert some of that percentage of unbanked customers into scoreable customers, then I'll be impacting the lives of hundreds of millions of people. And this is how in 2016 I started getting involved into alternative data and how could we solve the thin file problem out there. If you could skip through two slides, please. One more. Going back to Neil and Peter's presentations, global best practices and in established markets, you can see a role model for bureau combining financial services data and alternative data assets like telco, utilities, rentals, and pretty much any trended data like behavioral data on people you can get out there. And Neil was showing a statistic where if you do that, on average, the approval rates in the market will go up by 11%, keeping equal bad debt, right? So, and that's pretty powerful for established markets. Imagine what that number would be in a market like Indonesia, where we have more than 50% of the people not part of the bureau. So the mathematics of this are huge. And when I was looking with the team on that problem globally, the first question is, which alternative data do you take? Because if you're solving a global problem, then you need a universally applicable global data source, which gives you the same structure pretty much anywhere in the world, the same coverage anywhere in the world, the same predictive power anywhere in the world, and pretty much low cost wherever you go in the world. And we compared several data sources. So next slide, please. We compared the data sources based on coverage, so what percentage of the population of a given country does that data cover, and how predictive is the data towards credit risk default on loans. And looking at the traditional data sources, they give us pretty good benchmark. Like we know bureau scores can predict with 80% accuracy on average the probability of someone missing a payment on a credit. So that was our benchmark. And when we compared psychometric data, social media data, metadata, and telco data against these, it was very obviously who's the winner, and that was telco. So why telco was the winner? I'm not saying the others are not predictive, right? So they're less predictive on average, but then you end up with problems in coverage. They don't cover the entire population of the country. So for psychometric, for example, you have to ask people to fill in tests so that you can judge their psychometric score. That's very intrusive and just doesn't scale well. For social media data, you can't backtest the result historically going back in time, so you can't tell anybody how good would the score have been like a year ago. So you can't prove the effect. You can hope in future that data will bring benefit, so it doesn't scale well. For metadata, it's the same. You have to download something, install it on your app, get people to engage with the app and start downloading data. You can't backtest. And that was a major problem we had to solve. But with telco data, as my colleague here mentioned, that the telco data is highly structured. So anywhere in the world, telcos have pretty much the same information. The data is behavioral, so it's very close to credit data, actually. You repay your payment subscriptions, you top up your prepaid cards. These are payment behaviors. The data is historically stored, so you can go back in time years and years and compute a score to understand what would have been the effect of your score if that was taken back in time. So telco data was the clear winner, and we developed the telco score, which we used for trying to score the people who are thin file. And at the time, our view and my belief is that the balance of ICS or alternative data sources and credit bureaus is actually a very optimal model for financial inclusion, because bureaus are a trusted source of credit lines information, and they're trusted by banks and the financial institution. So if you're able to expose alternative credit lines of people and companies through the bureau's report, then the entire financial industry will access this data and will design the right products for different segments. So this is how you include people who are normally excluded from the financial world into the regulated financial community. You just give the data, the scores and the insights to the banks and the financial institutions, and they will develop the right products for these people. What we see in Indonesia today, ICS is booming because there is a need for that data. So people need credit. And what the ICS providers are doing is they're providing data to the credit issuers so that they can make an informed decision what type of credit to offer. But then imagine the next step of that is, and that was shown by AFTEC, combine the ICS scores and insights with the private credit bureau information, then you have a complete picture of an individual's exposures. And then banks can make decisions at scale and include more people in the economy. Going further with some examples. So with that experience back at Experian, then in Malaysia a few years back we ran, next slide please, we ran some tests of alternative score, comparing it with the traditional bureau score. And in Malaysia, the problem with unbanked population is much smaller than Indonesia, but still exists. For example, in the banking segment, we have about 6% thin file customers, but in the non-banking segment, that goes to 30%. And we developed a telco score in Malaysia and compared it to our bureau score. And you can see the weight of distribution of different data used in the two scores. It's very similar. Like in a telco score, you have payment history. In a credit world, we have payment history. So we use payment history and behavioral data to model people's behaviors. Then you have credit in the telco world, you have top-ups. The information is very similar to what we would use in a traditional bureau. Then we ended up with pretty good results, like the Gini would be comparable, slightly lower on the telco side. And ultimately, they work well in isolation. So you could use an alternative score to score people who are thin file and still have a good discrimination power of that score, good enough so that you could make a credit decision. Also, when we combined the bureau score with the telco score, it turned out that there are parts of thick file people who could actually benefit from their alternative score being combined with the bureau score. These are what we call borderline scores. Like if someone is in the lower score range and you assess their alternative score, they might actually get a higher score overall. It might help the lender improve their credit rating because the alternative data gives you additional insight on that individual or company, which helps you make a better decision on them. So the model actually, the more information it takes, the better it predicts people's behaviors. So the combined scores work in thick file world as well as in thin file. Next slide, please. So ultimately what we were able to prove as a point that after using an alternative score, segments of the population, so-called thin file or B40, the low earning segments of the population, the early, the young professionals, where you don't have sufficient credit data, those segments benefited the most. So ultimately, you could make a credit decision on people who were previously rejected. And that was measurable. You could backtest and measure that impact. Next slide, please. And the benefit doesn't end there. So you see here a screenshot from a proof of concept we did in the Philippines with an alternative scoring company. So telco information is pretty deep. Aside from trendy data around repayment of the telco exposures, you also have information of the geo-positioning of people's phones. And with some analytics on that, you can figure out whether someone is truly spending time where they say their address is. How much time are they spending there? Which time of the day are they spending most time there, and so forth. And all of these data points help lenders make better credit decisions in a digital way, which means access to credit is faster, it's smoother, so less friction, and overall end-user experience is much, much better. Therefore, you get better financial inclusion and better access to credit. Thank you.
Okay, thank you for the panelists. Now, I'm waiting for questions from the audience, but prior to that, let me ask first, yeah? Mr. Jun, when in your presentation, yeah, I see that Korea Credit Bureau has already moved forward, not only just create scoring from the credit data, financial credit data, but also you move forward to the alternative credit data. So, in this case, when you mention you have arrangement with ICS, so what is the purpose? Because by yourself, KCB has already done the ICS actually. Yeah? Can you comment on that?
Yes, actually, let me describe like this. When there's something unhappen is happen in the world, we don't know what is the next. So actually, like when I first time hear about the alternative scoring is like 10 years ago, I joined the seminar and then they talk about a lot of alternative data, and then we benchmark a lot. And from the view of the credit bureau, it is actually the technology is the same, but the data source is different. So from the view of the APIP or credit bureau, it is another source of value-added product. That was the view of the credit bureau. But even in the Korea, we have a very new fintech company which is focusing on the ICS or alternative scoring. Sometimes they successfully have a business with some financial institution, but most of the ICS company approach to Korea Credit Bureau because usually, LPIP has already have a network with the financial institution. Because even if we say about the alternative data, final destination is financial institution or credit granting company, meaning that even if some best ICS companies coming in, they said we have very precious alternative data. Finally, some financial institution should buy their services. That is the final destination. But in the view of the existing network with the financial institution, credit bureau already have a network in terms of the physical or IT or a human network is already there. So even if one ICS company comes into the market, actually their limitation to have a lot of network with a lot of financial institutions in the same time. But if they have a business alliance with a credit bureau, they can use credit bureau network for expanding their business. So that's the reason most of the business alliance with ICS is that they want to sell their data to the market, but they fear some limitation to sell their services. So by having alliance with the LPIP or credit bureau together, they can win in the strategy. That is one of the reasons. I think one of the reasons in Korea, credit bureau player, not only for the credit bureau itself traditionally, but also ICS player. That is one of the reasons.
Okay. Yeah, so it's good to know, yeah, to have potential collaboration between the private credit bureau and also the ICS. has already been explained.
One more thing. Actually, from the view of the financial institution, data integrity, security is one of the most important things. But in general, when the new ICS comes in, they have a very small size that doesn't have much investment to the security and IT investment. So from the view of the financial institution, they have a concern or issue that if they have a business with them, is there any problem for their data security or something? So those kind of the practical situation makes our Korean cases regarding the credit bureau and ICS have a hybrid model together. That is one of the reasons, I think. Thank you.
Okay, thank you. The next question for Mohammed. Yeah. Did you notice that in Evo presentation, it is mentioned that for the alternative data is effective for the thin file. But you see, if thin file becoming a thick file, do you agree that it is not that effective anymore?
It's very interesting. So there is a case study and testing done by one of the startups in US called Upstairs. And anyone who's interested, reach out to me. I'm more than happy to share that, because that was presented in Congress as well. So for the thin file, for the thick file even, what happens is there's always a cutoff point. Like let's say a financial institution is saying at 600 score, anything beyond below 600, I'm just going to simply reject because the risk is too high. Now, what happens is that it doesn't really consider that person from the other perspective as well. What I mean by other perspective is in this case study that was done, it was using the university background, that education of that person. So for example, in Indonesia, you have about 4.5 million graduates that studies in university, and they graduate on per annum basis, which is remarkable. Now, if you are to take that and start doing correlation and say, you know what, has this person graduated, from which university it has come, even though the score may be 600, right, you will be able to use other supplementary data, which is essentially the ICS, and being able to make a decision and approve the loan, because the ability of that human being or that individual will be a lot higher to repay versus someone that you just purely because he or she may have been missing one or two payments here and there, and then their score, their FICO score or something was lower. So you have said, no, I'm not going to offer you a loan, but you are able to convert. So this study, the improvement was almost 20% more applicants were approved by just using educational background without impacting the NPL. How remarkable is that? So in my opinion, ICS, even for the thick file clients, it will make a humongous difference.
Okay. To Ivo?
I think just to add to that, I think the overall theme, and we all agree, is that the more behavioral data you add on a person from different sources, the better insights you can draw from that. Both ways, right? Sometimes the scores will go down, and this is good because you're saving money from NPL. Sometimes scores will go up, and you're giving more credit. But if you didn't have that data, you would make a worse decision.
Okay then. I would like to invite question from the audience. Yeah. Okay. Please.
Hello everybody, Leonardo from Click. It's a registered credit bureau in Indonesia. I have a question for the panel, or just inviting for some comments on how much data is too much data. And while from a perspective of operators, we often focus on the solution, what about the users and the banks? What is their perceived marginal utility of all of these other data points that we try to bring to market? Okay, just some free comments from the panelists.
Okay. So thank you for your question. And actually, I totally agree with Mr. Ibu and your question. But as a LPIP or credit bureau people, we are really eager to all available data in the world, if available, right? But actually, recently, as there more and more alternative data is coming in our industry, and then new species appears, and then people talk about the competition or cooperation or synergy something, our regulator point out one thing regarding about the consumer protection. The reason why? Because sometimes the eagerness for the more data result in the data usage, which is not allowed to use. So that's the reason recently after amendment our legal law, there is a clear guideline that every financial decisioning from the financial institution or credit scoring should be explainable. That is very clear guideline from our regulator. So for your question, yes, more and more data is good for the business and also for the people and for the inclusion and innovation. But in the same time, in the view of the regulation, like some allowed data or black data or some race-related data, if they do not explain and then try to say you are rejected by using some score, is not allowed in Korea, because credit bureau should explain why our score is like this, and also some alternative ICS player should explain why their score is like this based on this information. Also, financial institutions should explain why your applicant is rejected based on this criteria. So, because we are from the industry, so we are totally in the same page regarding the having more data, but in the same time, we are living in the regulated world. So, for your question, I think my answer is about the consumer protection. Thank you.
I think you have got follow-up question?
That prevents users to actually enjoy the benefits of this innovation, correct? You're saying that compliance becomes a blocking point for banks to actually dig deep and enjoy and reap the benefits of this innovation. That's your comment. Clear?
Yep. I concur with my colleague. So more data is good, but it has to be right data. So that's the fundamental, and we are seeing now. I'm surprised that for the whole day no one mentioned ChatGPT, right? You see what it has managed to achieve, right? But ultimately, where the world is going to lead towards is users will have a full control on what component or what elements of their data is going to be used and for what purpose it will be used. And if I am being bold enough, I would say that in future, sometime, users will be able to monetize their data as well. What's in it for them? Tech companies are hoarding a lot of data about them to build their full persona and profile, right? But what's in it for the consumers? Hence the reason that I think, and I firmly believe that Indonesia is taking the right step with the PDP law. That's very important. But it has to be implemented in the right way, right? Once that implementation is in place, that's going to lead us to more exciting opportunities. And as Jun-san mentioned, it's going to be all about responsible and explainable scores that will be developed.
Can you elaborate more on how is the right way?
Sure. So how's the right way is, if I'm a consumer, right, I'm a firm believer, and it's not because I'm in tech, anyone who's collecting my data, they have to very simply explain to me what they are collecting from me and for what purpose, right? In the credit bureau world, or in the regulator world, it's explicit consent, right? So that explicit consent is critical because, and particularly for a tech-savvy nation like Indonesia, where you have over 140 million customers that on daily basis they go on social media, there will come a time that there will be an uproar from the consumers that will say, who has got access to my data and for what purposes they're using that data. So in my opinion, it has to be explicit consent, but it has to be implemented in a systematic manner. It cannot be an overnight that, you know, like a digital currency demonetization, that overnight it's pushed that everyone has to collect consent. That would be very, very difficult. And we are seeing that GDPR has been implemented, and that has set in motion the new privacy regulations around the world. And according to Gartner, 70% of the global, or 70% of countries globally have one way or another data privacy laws in place. We are seeing that that's where we're heading towards.
Ivo, do you have any comment?
Nothing material to add, just my view is that it's never enough. So it's never too much data, provided it's legal and it adds value to all participants in the exchange.
Thank you. Thank you. No, on this last statement.
Sorry, Leo. Yeah. Can we provide?
Sorry, was just a follow up on it.
Oh. Okay. From from Mr. Christian first. Christian.
Thank you, Pak. My name is Christian from AI4C, actually part of ICS, Innovative Credit Score. I feel that we are in consensus, right? There is additional value from alternative data combining with the credit data, but the view that I see here is more on the credit bureau side, meaning that, let's say, if we look into the landscape of the data in Indonesia, it's very fragmented. Agree on Ivo's point, telco is the largest coverage for most of the time, but what's your view or take with our landscape here, in which each data alternative is very fragmented, and the idea is if we want to bring financial inclusion, then the ideal situation is to bring this data together. Second question, if the time permits, to Mr. Sung Jun. You mentioned in Korea there is a synergy already, right, between ICS and Credit Bureau. In terms of the framework of the collaboration, how does it apply if there are some restrictions in terms of data sharing itself, especially on the Credit Bureau side? Just to elaborate a bit, the credit data is specifically allowed to be processed by the Credit Bureau for the license. But if it's on the innovative credit score side, then theoretically we are not allowed to do that. Keen to learn more from your experience. Thank you.
I'll have a go at the first part of the question. My opinion is that largely ICS today in Indonesia is data monetization play. So people are making money from the data they have accumulated, like organizations. And this is natural evolution because there is a need for alternative to the Bureau because of the lack of coverage. And over time this will normalize. So looks like the regulator has ambitions to go to the next stage and figure out a way how both ICS and private bureaus improve inclusion by collaborating. So we'll see how that plays. But ultimately, I believe that this information will centralize more and more just because it's related to the individuals, the consumers, and the companies. And the more you centralize it in one place and you expose it to lenders and the rest of the financial services industry, better decisions can be made at scale. So I believe we're going into that direction.
Yeah, thank you for your questions. Actually, the fragmented is one of the key words for the ICS. I totally agree. And even in Korea, every time I met the ICS people, they explain we have our data and then this is very valuable data. But like Mr. Ivo mentioned, that the reason why the telco data is good because they have a high coverage with a certain information value. So, but sometimes if the fragmented data from the ICS, if the coverage is low, it means that every time they require some inquiry to ICS, there is a much higher possibility there is no hit. From the view of the financial institution, even if they have an inquiry and then take some time for the development or something, they don't have any result. It can be a kind of they think that that alternative player is very low value. So in my opinion, now in Indonesia, there's a new species is coming and we don't know what the kind of the ecosystem is best for the country, but what I observed in Korea is that it's like a natural selection. So if new species comes in and they insist our data, our score is very good, but if their value is low and coverage low, no financial institution cannot buy that ICS services, and naturally, certain years later, they're gone. And if some ICS player provide very good services with a very high coverage, they try to keep using that data, and then we can see that company years and years. And why in this process, why we have a collaboration? Because final destination, meaning the financial institution, when they are using the alternative data, they do not only use the alternative data, not only the alternative data, but also they are using the internal financial data, also external financial data, such as LPIP data, to have a best performance internal scoring and inter-credit scoring model and strategy. So by doing that, when the financial institution investigate or check for the value or performance of the ICS information, they need to compare, and by providing financial information together from credit bureau is more valuable to them. So that's the reason the collaboration is very natural, because when the financial institution want to make use of the outside external data, including the credit or alternative, to the user it is same. It can be a RPIP data, it can be a new ICS data. But what is important is that after final decision, which information is valuable and high coverage. So in case of Korea, providing the financial credit traditional information together with ICS information was the demand from our industry. That's the reason we collaborate together. And sometimes some ICS player independently have a contract with the financial institution, but usually it is very common with the synergy together for in Korea. That is the kind of natural selection as is in Korea. Thank you.
Thank you. Yes. Next question from Mr. Inko.
Maybe it's gonna be the last question as we ran out of time. It's okay, but Mr. Inko, yeah, one last question.
I could not repeat it's a question, so I'd like to share about my ideas. And so when you mention about the credit bureau and the alternative data, so I want to share to all the audiences that. And so we need to the definition of the credit bureau, and also the definition of the alternative credit bureau. Somebody's a little confused about that. So when you mention about the credit bureau, what is the definition of the credit bureau score? For what purposes? I have a question. Willingness to pay or capacity to pay? Which one? And so when you mention about the credit bureau and consumer credit report also included, when you build the credit bureau score, all the data based on the consumer credit report. Why it is so important? When you explain to the consumer, we need to explain to the consumer why you has been rejected, why you have this kind of the low CBS score. That is called the reason code. And so some cases is adverse action report. You should provide to the consumer why consumer has the right to manage their own credit. But without the noticing, and is by using various type of the data from different channels, so as a consumer, how can handle their own data to increase their credit bureau score? So, as in my presentation I mentioned, we have to approach only to increase the predictive power. That's not enough. Social approach, political approach, technical approach, legal approach, and also to the viewpoint of consumer, how to approach. What would be the good face to the consumer, not only for the financial institutions. So, and in this audiences and all the people I like to share about we need to make it clarify about the definition. So that's my opinion. So, as to the audience, application, willingness to pay, capacity to pay, which one is more important to us? Thank you.
Okay, then because the timekeeper had said so, I think that comment from Mr. Inko conclude our panel discussion today. Applaud for the honorable guest, honorable speaker. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much to all the moderator and speakers. Please stay on the stage as we will take a group photo. It's like a tradition, ladies and gentlemen. All right. On 3, 2, 1. Okay, one more time. On 3, 2, 1. Let's give a round of applause to all the speakers and moderator, ladies and gentlemen. And for Mr. Sung Jung Chun, Mr. Sung Jung Chun, Mr. Muhammad Fuladi, and Pak Wahyu Trenggono, please kindly take your token of appreciation as we really appreciate your insightful session. All right, ladies and gentlemen, we have come to the end session of today's seminar. Next, we will have the FGD and working group sessions of innovative credit scoring. Please note that this session is exclusively for the attendees of the focus group discussion, which comprises of OJK's ICS task force and the ICS working group from fintech associations. We kindly request that those who are not part of the FGD to leave the venue. We thank you so much for your understanding and cooperation. However, please let me remind you that we will still have our second day of seminar tomorrow to share the knowledge of promoting digital finance inclusion for consumers and MSMEs through the use of credit scoring. We will see you again tomorrow, ladies and gentlemen, at the same time and at the same venue. Thank you. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om. Ya, baik Bapak Ibu untuk peserta